morning once again. Okay, so this is the class for accounting for managers actually. So as an introduction or a bridge course, normally we don't have like this in the previous semesters. By seeing the performance and request by the participants, we thought of giving you a class before we start formally the classes along with your other batchmates, those who are from BCom or BBA background. Okay. I think it's not compulsory only to attend by the engineers. It can be attended by others also, I think. So some of you may be BCom or BBA also maybe here. Okay, before that, those who are online, I'm audible?
Yes, sir.
Those who are online, I'm audible?
Yes, sir. Audible, yes.
Yes, sir.
Audible. We are not able to hear you. Anybody from online, just to make some sound?
Sir, we can hear
Yes,
you.
sir, it's clearly audible, sir.
Okay.
It is audible, sir.
All right. So the subject is accounting for managers actually. Okay, so we are supposed to be having some kind of introduction to the subject to bridge the gap. Those who are staying to the subject and those who are already knowing the subject, right? That's the only agenda what we are having today, right? So before we start, anybody what is accounting from non-commerce background who are not studied accounts before? What do you presume about accounts? Recording some transactions. Okay. Summarizing. So you are all BCom students? Oh, then good. Then there is no gap at all. Yes. Okay. Okay. So first up we are into, but to reach the other bank of the river, we have to help, take some help. Okay, no problem. So before going to this all kind of academic definition of what is accounting, how the accounting works, how do we make accounts? Okay, we need to discuss few concepts relating to accounts. Why we need this? Okay, what is the framework, the preface? Okay, so you all know you are all working in some companies. Okay, you are into operations or you are into marketing, you are into so many other functional areas of management. Okay, so invariably all of you might have seen this kind of process in your companies or in your organizations. Okay, academically we are going to discuss that in the next coming few sessions. Okay, before that, what is a business actually? Don't think there is what is this a question you are asking? We are all executives, we are running a business or we are into business. So you're asking anyway. Teacher, I am a poor teacher. Just tell me, yes, sir. Buying and selling. So morning I bought one packet of milk. So am I told that I'm doing a business? For me? He is doing a business, I'm his client, I'm his customer. I'm his customer. Okay. So one who is selling to the end user or to the middleman or to the distributors. Okay, buying and selling is one of the business activities. Okay. Is it compulsory? There should be a buying and selling of something. Manufacturing and selling. We're not buying the output, we're buying some kind of raw materials. You process it and you sell it. So broadly, the business, trading business. First, what was referred by that sir is trading business. You are buying something, showcasing it, and selling it. That's one possibility. Another one is what this sir is telling, that is manufacturing something and selling. Buying some inputs, assembling it in the way in which the customer needs. So we are selling it later. That's manufacturing business, right? First one is trading, otherwise it's called as merchandising. Clear? You all know this. I'm just giving a academic color of that. That's it. Okay. One is merchandising or trading, which involves buying and selling of goods. Second one is manufacturing business. Okay. Third one is just services. We neither buy anything nor sell anything, but we render some services. Okay, there are some receivers of services. That's also a business. So any business organization in this today's environment, in today's economy, may be doing any one of these three or the combination of these three or two. That left to the business organization. I can't say as an academician coming and telling you that, so you do only buy and sell. No, that's my business. Okay, I will decide what I want to do. Who are the teachers to come and tell? Who are the academicians to come and tell? So we have to derive some points from that. That's it. What is happening, we have to take and we have to guide and we have to take it forward. And we have to learn out of that. 3 possibilities of doing business. Is there anything available in this world apart from these 3? Nothing. Yes, sir. Non-profit organization. That's not a business. Once again, one by one. Non-profit organizations, NGOs, NPOs, are they doing business? Yes or no? That's it. No, then we are not concerned about them. If you take an admission in DSU, I will come and tell you what is accounting. If you're just going on the road, if I track you, sir, what is accounting, then you, sir, who are you first of all? Are you idiot to come and tell me something? That kind of understanding we can have as of now for NPOs. Okay, of course, they do maintain some records, they do maintain some books of accounts, they do accounting also, but we are not concerned about that. Well, these 3 possibilities. Someone is telling there, what is that, sir? No, what? See, you come and attend the class by sitting here in the first bench of DSU, gallery number 3, or you just lying on your sofa and you are attending the class online. Both are EMBA 2022 batch student. That's all. Okay. You just open a shop and arrange all your items and attract the customers and selling it, or you are just sleeping somewhere, your app is working for you and customers are coming and picking some goods out of that. Business, that's it. Education, service, 3rd type of business. No, don't confuse the word service. Suppose if you are seeing a person who has committed with an accident on the road and you're helping him, you're serving him. That we are not talking about as a service here. We are all materialistic people. We talk about only activities that are involving money. Okay. Service, the word what I'm telling is, now I'm serving you. The university is serving you. You are the service taker. We are the service providers. The university is a service provider. I'm just a part of that. Okay. Doctors, I mean, architects, people, service, IT companies. Okay. Again, there is a debate. IT companies are only serving, or they're also producing products. Software is a product or service. We'll keep all those things aside. Okay. Service, nature of industry, manufacturing nature of industry, and merchandising nature of industry. 3 business types. Or the combination of the X company is there, or Wipro is there, or Infosys is there. Are they into only one sector of it, or in the combination of 1 or 2, or all the 3? So I don't want to lose my customer. I'll offer I offer only product what I'm manufacturing, but customer is in need of the same product along with some more product which I'm not producing. If I do not offer that product which is taken by them, which is needed by them, then they will go for an organization where they get both the product together in the same place. So in order to just keep them with me, I'll buy and keep as a stock and sell that also, as well as I manufacture something. Okay, so that time I'm doing both the business together. Okay, this is clear. What is business? Right. Next, how do we do business? What is a form of ownership of a business? Suppose if I want to do any one of these business or the combination of these 2 or 3, I should have some setup. I should have some arrangement. Okay, how to start it? I'm not talking about the startups or those things. Nothing. How the ownership pattern of a business is there. That is required for people who want to understand accounting. Okay. What are the ways in which we can own a business? Sole proprietorship. Excellent. If you are an engineer or a science student, if you're telling sole proprietorship, then there is no gap at all again. Sole proprietorship. We're not going into detail about that. You just read it later. There's one form of owning a business. I am the king, or I'm the king. That's it. Nobody is there to question me. I do what I want to do. I bring my money. I do whatever I want. Of owning a business, sole proprietorship, or simply proprietorship, sole trader, colloquially they will call it. Okay. Second way of owning a business is partnership. Excellent. You're all knowing that. Partnership. sir, my money is not enough to, or my skill is not enough to do this business effectively. So I want someone also to be joining with me to run my business. But I can't get anyone without giving any benefit to him. Nobody in this world is going to do some service for somebody. Everybody is in need of money. That's the order of the day, order of the word. Okay, so I want to do something. I take my friend or I take someone who knows that business. I will share my ownership with them. Now my business is going to be carried out in the form of partnership. There are two partnership available. Normal partnership, another one is limited liability partnership. Just keep in mind, we'll talk about this later. Limited liability partnership. Okay, right. Partnership, broadly partnership. Sole proprietorship, partnership. I'm not showing any PPT or slide, anything to you as of now. Okay, I'm just talking, right. And third way of owning a business is, sorry, sir. Shareholder is, okay, one second. Let us clear this. Company joint venture. There is nothing called joint venture in the form of ownership. Okay. I myself and my friend both are joining together and doing a venture. It can be called as, that is colloquial term. That's a strategy actually. Business strategy. You'll study that in some other subjects. Okay. In real life, you do everything together same time. But in academics, we have compartments. S1, S2, S3 like that. Okay. So here joint venture is a strategy, but that is not a form of business ownership. Okay. But Sir was telling one more word, that is company. Company is having its own meaning legally. Okay. We can start a business by joining with so many people. The next level of partnership, that is called joint stock company or simply company, incorporation, corporation. These are all the different words we refer for that kind of business organization. Example, Infosys, any company, any business name ending with the word limited, LTD. If that word is there in that name, official name of the company, official name of the business organization, that organization comes under the ownership pattern of joint stock company. Slowly we are entering into some technical aspects. Simply, if you are saying company, we colloquially refer every business organization as company only. If I ask my friend, where are you going? Are you busy? Yes, I'm in my company. I have some meeting in my company. That not necessarily to be a joint stock company. What he is referring to is a business organization. But legally, if you say company, it has its own distinct, unique, separate meaning for it. Joint stock company, we say. Okay. Example for that, I already told you. Every name of a business organization ending with limited is called as joint stock companies. You are all working in so many companies. Maybe majority of them may be a joint stock company. Infosys Limited, ICICI Bank Limited, State Bank of India Limited, Indian Oil Corporation. There is no limited, but the word corporation is there. Indian Oil Corporation Limited only. IOC. Okay, ONGC. Coal India Limited. Everything. Okay, Reserve Bank of India. It's also a company. NSE Limited, National Stock Exchange Limited, BSE Limited. These are all the example for joint stock companies. In joint stock companies, there are two types. There are many. We are not studying company law here. We want some background understanding of accounts. So we have to understand what are the types of companies with respect to accounting perspective. There are two companies. And obviously public limited. If we say private, then public should be there. Okay. Private limited. Anyone in this meeting online as well as those who are sitting here can tell me the uniqueness of private and public limited. How a company differs from each other. One second. We'll just clarify that somebody is saying no. This answer is contradicted by somebody. Who is that no? He is working for a private company. Yes, sir. Okay, sir is bringing one more. We are going to Mysore. On the way, Srirangapatna is there. There also we have to visit. He is telling listed. He is bringing one more word, no? See, people, engineers and science background students, they are intelligent, they are knowing everything. But this kind of confusion, these accounting people will create. One place they will use one word, another place they will use another word for the same thing. Then will get confused. What is this? Then finally in question paper, they will get, sir, this is not taught in the class. Last year one guy was telling, sir, question paper was out of syllabus. Okay, let us come to this. Okay, let us listen from him only. That's good. Yes, sir. Please continue with that.
I work for a private limited company. Not listed
Stock exchange.
It's owned by people.
Please come. Yeah.
Owned by
Hmm. Okay. Okay. So that's a private limited company. But sir was telling in another perspective. His answer is very much right. If I remove the word limited and inserting a word called sector. Public sector company is a company owned by government. I just changed in his sentence only one word. Limited I taken out. Limited I taken out and inserted a word called sector. ONGC is a public sector company. SBI is a public sector company. LIC is a still public sector company. Yeah, that's a corporation, bigger statutory bodies. Okay, we'll come to that later. So now you understand public sector and private sector. ICICI Bank is a private sector company. In that way, what sir was telling is correct. Controlled and owned by majority, controlling stake is with government. Either union government or state government or the combination of both. If it is there, that company is called as public sector company. Private sector company. Government is not having any stake in that, or government may have, but the controlling majority of the stake is with the private people, like you and me. Infosys is an example for private sector company. And where SAR is working also is an example for private sector company. But now the difference between Infosys, which is called as a private sector company, and where SAR is working, what's the name of the company, sir? Axial Labs Limited, Private Limited. Okay, these two companies are private sector companies, but they are not public limited companies. Infosys is public limited, but this company is not public limited. He was telling one word called listed. Okay, what is listing? The ownership, please understand. If I'm going a little fast or I'm not telling anything which is not known to you, please stop me. For that purpose only we are having this class. If I want to sell my ownership in that company, in that business, I am freely allowed to do so. I am freely allowed to do so. If that is the case, that business organization, that company is called as public limited company. Tomorrow I can go and buy Infosys. Tomorrow I can go and buy SBI, but I can't buy any in my life of that time or in the company's life. I can't buy this company unless otherwise the owners of the company is inviting me to join in the company. It is prohibited. Suppose Mr. A, who is a member of that company, who is one of the part owners of the company, is not liking to be continuing the business further. But he has some money in the company. He has put some money in the company. What is that money called? Capital. Capital. Slowly we are introducing one word called capital. Okay, capital. Okay. He wants to quit the company. He cannot quit the company unless otherwise the others are agreeing him to sell his ownership to someone else. By its articles of association, please understand, there are two documents which are very much essential for a company. Like a country, what's the document is important for a country? Constitution of that country. We can't go beyond the constitution, but constitution can be amended. Okay. Majority of the part can be amended, except the basic preamble of the constitution. Similarly, to have a company, we are creating it. We are registering it. Where we have to register the company? In each and every state, there will be an office called Registrar of Companies, ROC. Registrar of Companies. We will go there and we will give two documents. One is Memorandum of Association, another one is Articles of Association. Company is nothing but association of people. That's it. Association of people. So in what way, according to what rules and regulations, we are associating with each other? That need to be chalked out. Point 1, 2, 3, 4 in two different documents. Those documents are called as AOA, MOA. Okay. Through this AOA, through these articles of association, private limited company prohibits the members of the company to transfer their ownership in the company to another person who is an outsider. Prohibits. If that prohibition is not there, if the members are freely allowed to transfer their ownership in the company, in the company to anyone else, unknown, strange people, anyone else. Of course, according to the rules of the country, that's the broader law, constitution or any other law, company law or anything else. But within that, if I am allowed to sell my share, sell my ownership, share means nothing but ownership. In another person, to another person, that company is called as. If I am allowed to sell my ownership in the company to anyone else, then the company is called as public limited company. Yes, sir. Which one? 1 second. Yeah. Which one? This. Yeah. That's only understand. That's not our subject matter. To start a company, I have to get myself registered. To register, I have to approach an office called Registrar of Companies. Each and every state in its headquarters, it will be there. If it's a very small, tiny state, it will be attached. Okay, where your registered office is going to be there, in that state, you have to approach the ROC. Suppose I'm going to have a company. My registered office is going to be Gulbarga, means I have to approach Bangalore ROC. That's it. Okay. Point is clear? Yes. One of you. Yes. No, I'm not telling you can't sell. My word was very clear. I was prohibited by the rules of the company to sell my shares to outsider. I have to sell the shares to the fellow members of the company. Why it is considered like that? I don't want to dilute the ownership of the company. I have created, I have come out with an idea. I started a company, I commercialized it. Now it is pan-India company. Profit monopoly. Somebody is eyeing on this company and just asking me, I will give you double, triple, or 4 times what you invested. Why can't you sell your shares to me? It may be affecting the interest of the other fellow members in the future. The control may go to the other people in a future. So I don't want to leave that. I want to have a control. Of course, you can exit, no problem. But what should you do? You have to sell your ownership to your fellow members. One thing. Otherwise, suppose nobody is buying. What you can do? Nobody is buying. I want to exit. I have to get the permission of all these people to sell to someone else. That is possible. That's what I'm telling you. Freely allowed. In public limited company, you are freely allowed to sell your shares even without the knowledge of anyone else in the company. Tomorrow you are going and buying Infosys equity share, Infosys share in the market. Nobody in the board knows unless otherwise you are going and claiming, sir, I bought this number share 004250 to 004257. 7 shares I bought or 8 shares I bought. You have to send a letter to the Infosys and Infosys will make records. It will delete the former owner of the company, the share, and it will insert your name in the share register. That's a process. Nowadays, of course, is everything happening online. Okay, there are some process. We will not discuss about that. That's clear, sir? Memorandum of Association and articles of association. Okay. That's not our subject matter, just it's a incidental concept. So we talked about that. Okay, now come back to the main discussion. Company is one of the form of ownership of a business. Okay, but we have not answered this question. What is that? Not question, that word what I was using. What is that? Listed. Now look at the public limited company. I am freely allowed to sell my ownership in the company, where I can go and search the buyer of the. I'm ready to sell my ownership. I'm allowed to sell by articles of association because the company of public limited, where I can go and find the buyer. Can I go and ask everybody in all the places, or I have a share in this YZ Limited? Can you buy this share? That will take 1 year, 2 years, 3 years. I can't. It's difficult. For that, we have an arrangement called stock market, stock exchanges. Infosys, when it was starting as a public limited company, going for an IPO. I'm using what another IPO, initial public offering. Now latest, you might have seen LIC. Some of you applied for LIC. Last time. So it's a new company in itself. Actually, there was no company so far in India listed from insurance sector. Okay, valuation was done. Okay, hype was created, and people were telling you will get a. I mean, there was a logical, legal difference also. LIC, I mean, insurance company is not just like another companies doing another business. It's a specialized nature of business. Policy holders and shareholders, how they are connected to each other. Customer and shareholder in the case of normal companies. Customer is no way connected to company. Okay, but Act, Life Insurance Corporation Act of 1956 says that policy holders are having some kind of say in the company. But what is that kind of say? We have to again interpret by the lawyers. Okay, so that some people was arguing that it cannot issue shares to the public. First priority should be given to policyholder, but it was not taking place like that. It was given to everybody. Okay, nobody has taken that point into legal references. So, but some people were writing when it was coming with an IPO. So what I'm telling you, last means this kind of things. Not preference one, no preference. There was no preference. I applied, I did not get. I was worried the day of allotment. The day of listing, I was happy. The day of listing, I was happy. Okay, it's not like, it's not like in the first internal test you are getting 0 mark. It does not mean that final exam you won't get 100. You get to link the Aadhaar card, PAN card, and all those things. Okay, we are deviating from the mainstream. Come back. Yes. So the point is, I can sell the shares. Where I can sell, for that an arrangement is required. That arrangement is stock exchanges. We have 2 stock exchanges actively functioning. There are many, but actively functioning is these 2. Others are almost in the deathbed. They will die, or they will be doing some other business. They will become a brokers. NSE, National Stock Exchange Limited, and Bombay Stock Exchange Limited. If my company, I take an example of Infosys, in 1990s, when Infosys was coming out with an IPO, should have approached any one of these 2 organizations or both the organizations to get a permission to allow the shareholder of Infosys to come there and sell or buy the shares of that company. That process is called as listing. The company which has done that process is called as listed companies. Clear? All private limited companies are unlisted companies because there is no requirement. No, I did not take admission. Then why should I come and attend the class? All private limited companies are unlisted. Simple. Okay. All listed companies are public limited companies. But all public limited companies are not listed companies. All public limited companies need not to be a listed company. Why, sir? I don't want to get listed. I have only are required to start a public limited company. I have only 8 members. I started a company. There is no need of listing the company. But these 8 members can sell their shares at any time to anybody. It's only a matter of 8 members. For these people, I needed to go to a exchange and getting my stock listed. Okay, when my company expands, okay, the compulsory listing comes into picture. Okay, that are all company law. This much is enough for accounting. Come back to the fourth category. Now, sole proprietorship, partnership, joint stock company. Fourth one is Hindu undivided family. We don't talk about this, only one line I'll tell you. Okay, it's not a joint family. It's a Hindu undivided family business. All family business is not a HUF business. Myself, my son, we started a business. It can be a partnership. It can be a limited liability partnership. It can be a private limited company. To be a HUF, but HUF means ancestral business should be there. Undivided property should be there for the family and the business. And the family is the manager of the business. Okay, we don't have much organizations in this category. Hindu undivided family form of business ownership. Fourth. Fifth one is cooperative form of business ownership. Cooperative. Societies you might have seen, no? Karnataka Milk Federation Society, something is there. This kind of societies, we were societies, artisan societies. I mean, society. Society means what? Cooperative societies. Same business for a common interest. If I do business individually, my bargaining capacity is less. So I want to become an organization, collective people. Okay, that is called cooperative form of business ownership. These five are there. Any other forms of business ownership is there? Hindu undivided family, HUF. Simply we call it as HUF. In West Bengal, Orissa, some other place, Gujarat, these areas, some business in a small level, it may be there. I'm not knowing the names of the business, sorry. But there are some business, even today it is existing. But don't confuse the family business with HUF is a legal status, just like a joint stock company, just like a partnership. Legal status is there. It's not like myself, my father, my wife, and my mother all are together and doing a business. That could be a family business. Colloquial name, just like a joint venture. Family business is a colloquial name what we use to refer a business which is run by the family members. But the ownership pattern of the such family business need not to be a HUF or need not to be a joint stock company, or it can be anything. A family business can be HUF, it can be a partnership, it can be a limited liability company. I mean joint stock company. Okay, sorry. Yeah, we'll not go into that. We'll stop that. Example, yes, of course, any business you take an example, any business run by the family members, but Reliance, I am also one of the which Reliance. Reliance is not a company. Reliance is it's not a company. I'm telling. Just a name. We can go a little more decoding of that name. It's a brand. That's it. No, they have so many brands under that. Reliance is a group of companies. You can say Reliance Industry Limited is a company. Reliance RIL. Then RCom, Reliance Communication. There are so many. Okay, we will not go into that company. So these are the various forms of ownership. Why did I tell all these things to you? First, we studied about nature of business. What is business? Then we studied about types of ownership of a business, forms of ownership of business. Now we just merge these together. Combination, permutation, combination. 3 into how much? 1, 2, 3, 4, 5 are there? Yes. Okay. All these things are there in this world. In one way or other. Anybody may be in the private limited companies, Saris in private limited, somebody may be in public limited, somebody may be in sole trader, somebody may be in partnership. The business also may be different business types. Now, as an accounting. Okay. What is accounting? Now we are coming to that. According to you, what is accounting? Oh, you are more into. If I'm asking what is Bangalore, he's telling everything about Bangalore. Then there is no need of telling about Bangalore by the person. Okay, that's good. Tracking transactions. Very good. Recording. Okay, why do we do all these things? Statutory requirement, okay. Then financial statement of a company, okay. to know the profit and loss? Okay. That point we'll take. Legal requirement is not for everybody. If it is sole trading business organization, nobody is there to question me. Today I'll open the business. Tomorrow I'll close it. Morning 9 o'clock I'll open. My friend is calling. Today there is one Vikram movie released. Why don't you come for me? I'll just shut it. I'll go. Government cannot send a notice. You open the business by 9 o'clock, 9:30 you shut it. Customers are waiting in the queue. Where are you? I'll tell. That's none of your business. It's my business. It's none of your business to ask anything to me about the business. But it is not like Infosys. Suppose Infosys is shutting down. Take like X Limited is shutting down. Immediately there is a problem in the market. 10,000 employees, 20,000 employees will be there. They will have a problem. Lakhs and lakhs of customers will be there. Government is bothering. Karnataka government immediately will come to the family Sudha Murthy. Madam, how are you? Why today the door is closed? They'll come and ask closely why. It's about the business. It's about the economy. So real requirement is not for everybody, but everybody is interested to know the what is my performance. About accounting. Okay, finally, what is my performance? Please tell me. That's what your question, right? At the end of the semester, you'll ask me, sir, what is my mark? Tell me. You keep on telling about what is accounting. We bother about that up to some stage. After the stage is crossed, questions are tested, then you'll ask, sir, what is accounting? So profit or loss is the progress of the business. Performance of the business is captured in the form of profit or loss. Okay. So you all have no problem to use these two words, profit or loss. Please write down in your book. So far you did not write, no problem. Now you write it. Profit or loss in one single sentence. Profit/loss. Okay. The forum is accepting. The accounting is required to know the profit or loss. That's what we discussed so far. Decided. Okay. Then what is profit according to you? Anybody from online, can I hear? Some of you still online. Anybody can respond according to you? What do you presume about the term profit? Anybody? Anybody there? Okay, now
We
we are
can call it
creating
as
trouble for
financial
us.
gain.
Financial gain.
Yes, madam. One second, sir. 1 second. Somebody
can
from
call it as
online, they're
financial
trying to say,
gain.
right? Yes, madam. Somebody is trying to say, please go ahead.
We can say it as financial gain, or it is a financial advantage for the business that is done. That we
Okay.
can call it as profit.
That's called as profit. All right. Anybody? Sarva is telling something.
Is selling cost minus manufacturing cost?
Sorry, those are online. 1 minute, hold on. One of your classmates in the class is trying to say something. Yes. The profit, what you got? That's what they're asking. What is profit? Once again, not simple. Layman understanding. Please don't think that you are executives. I have that respect. Okay, so no problem. 1 second. You are executives. You are working in some company. You are creating a company. You are the pillar of that company. Everything is accepted. But think for some time as a layman. Purchase minus sales. Okay. Okay. All of you are getting this point, right? I'll give an example. For this. I have a counter argument. Your formula is excess of sales over purchase is called profit. Layman only. We are all layman only. Okay. If you are expert in accounting, there is no need to sit here. Okay. Right. Excess of sales over purchase. Sales minus purchase is equal to profit. Got it, sir? That's the equation sir is telling. Anybody is contradicting with this equation? Yes. I am. Yeah. Okay. Okay. Fine. Good. Very good point. Purchase. Suppose I bought goods for 1 lakh. Same goods for 2 lakhs. What's the profit? 1 lakh. But I have given 1.5 lakh as a salary to my manager. That point is bringing into the picture. One second. Don't go into the so many words. Everything put together, expenses. That's in a simple. We'll go in simple. Don't confuse. Expenses. If you confuse, then I'll get confused. I won't tell you. Expenses. Just okay. Expenses. Sales minus expenses is equal to. Are you still okay with this? Anybody? Is still contradicting with this? Yes, he is still contradicting with this. Here one invented, he added something. He is still going to add something. Yes, sir. Okay, let us keep it this aside for time being. One second, sir, one second. He is telling something about investment, capital, many more things. We'll keep that all aside. I have zero investment. My business has nothing to invest. I have not invested in my business. I'm just on the platform. I'm just standing there. BBMP stones are there. In that, I'm keeping the product. There is my friend who is in Mysore, not having any business at all. I'm going to him. Give me your goods. I'll sell and give you money. I did not. I have not paid anything for him. Possible or not? Hypothetical, but possible. In that case, your point cannot be valid there. So that kind of business also there, right? So time being, but what you're telling is very much correct, but we'll keep that aside for understanding the basic concept. Okay. Sales minus purchase plus expenses. Purchase plus expenses, sales is there. Okay. Anybody? Sir.
Hello, sir.
Leave it. You are a BCom student. Then we have to tell. Okay. Forget about BCom student. Please don't talk. We'll make it simple for the engineers. What sir is using that word is not going to be used at all in our MBA class for this entire semester. That is his understanding from the BCom. One important warning, I can say warning, okay, or instruction. Please unlearn whatever you learned about accounting in your BCom for time being. Okay. There are some formats. What we are going to do is different. Okay, one thing I'll tell you for that warning. We are going to discuss accounting only from the perspective of company form of organization. We have discussed 5 forms of ownership, no? In these 5 forms of ownership, who is a rich person? Joint stock company only is a rich person. If I don't have anything on my own, I can't help anybody else. If I go and ask a job in sole proprietorship organization, the maximum salary he may give us 1 crore maybe. I'm telling about very, very hypothetical 1 crore. 1.5 crore salary, no. Our business is not that much. But in companies, okay, Sundar Pichai salary, how much? You have to ask Sundar Pichai only, right? No problem. Several crores are there, right? My point is, giant stock company is the only organization, only forms of ownership, which can cater the needs of the large customers in one end. Another end can cater the needs of the employees in a large scale. And again, one more point. I told you, Sudha Murthy was asked by the government, Madam, why are you closing the company? So that kind of problem is there in the giant stock company. Government is concerned about it. It's a larger forms of business organizations. Being or quitting an organization kind of giant stock company will affect the entire economy. So government is concerned about that. Many people were investing. We don't know who and all or where and all the investors of Infosys is located. Entire world, the Infosys investors may be there. Okay, so if anything is happening in the accounting system of Infosys, that affects the entire economy of the country in a smaller extent. The larger extent, the economy of the world. Okay, so in that way, we are concerned about only the accounting of joint stock companies. We can get opportunity of being there with the company, and that company is a bigger organization in the economy, and it is serving the broader category of the people in the customer as well as in the employment. So in that way, but process, procedures, basic principles, everything is same for all the 5 forms of business organization. Slightly here and there, some changes will be there. But we are going to look into the perspective of joint stock companies. Why I'm telling this is, in BCom or BBA, you might have studied the accounts of sole trading organization or the maximum of partnership organization, or some books they may teach about the company also. But the first one, what you learned was sole trading, sole trade organization. So that will be there in your mind always. So please remove that. You learn new thing from here. Okay. Please add to this. Sales minus purchase minus expenses. Yeah. Yes, sir? Okay. Since we touched this, we close this here. What is that, sir? Please, all of you understand, we are introducing new terms. Now, I'm not telling anything. I'm trying to tell so many times the very basic things. But of course, you may be knowing about it, so you are bringing in. So there and there we'll close it. Yes, sir. What is debt? Borrowings from anybody. Borrowings from anybody by the business. For the capital. That's called debt. Debt capital. Okay, let us just do one thing. Capital can be of two types. The owners can contribute the capital. That's called owned capital. Owned capital. Simple. Owned capital. The money what I borrow from outsiders can be called as borrowed capital. That's simple now. Owned capital, borrowed capital. Technically, in the books, they may write equity capital, debt capital. Debt is nothing but borrowed money. Equity is nothing but owned money. Owned money. Owned by whom? Owners. With a business. Okay, right. Still the question is unanswered. That means the equation, we are trying to find out the equation. No, what is profit? No, this is what a layman understanding, right? Simple. Finally, that's the only thing. Can you repeat, sir? P is equal to, profit is equal to I minus E. Simple. Income minus expenditure. Please, all of you note down this. Previous sentence you wrote profit or loss. You written no. Again, next line, profit is equal to or loss is equal to income minus expenditure. Is it looking like a mathematical class? Yes, it should be. Okay, accounts we should not bring in immediately. Profit is equal to income minus expenditure. If it is plus, it is called profit. The answer is minus. It can be called as clear. Now we should understand in this equation what is income and what is. If that is clear, we get that equation solved. Okay. We'll come to that in the regular class. Stop it. Next. Now somebody told debt, somebody told equity, tax. Tax, okay. We'll come to that equity and debt 1 minute later. We'll clarify this. Tax. What is tax? In the equation, there is no tax, right?
Expense.
Tax is not expense. Which tax you are talking about? It's not a part of profit. Government is not telling it's a part of profit. Okay. Income is generated, profit is generated. On that, you are going to pay tax. Forget about tax. We wish economy will be free from tax. If it is there, we'll minus it. That's all. You don't worry. Profit is there. Okay. Government is telling, ministry is telling 33% you give. Some movies they're telling no. You keep the capital. I mean, you take the profit, you give the tax to us. That much tax you are collecting from us. So you take the profit, you give me the tax. I'm happy with the tax. Some colloquial joke in the movie. Okay, forget about it. But tax can be minused after the profit. It's part of profit or not, we don't know. But it's charged. It's minus from. That's okay. That's always changing. No, 33%. It depends upon the company. Some company they're having zero tax. Okay, you come here. We'll give you the land. We'll give you power. We'll give you everything. Don't give us tax. There are some places. Canada government is trying to develop this side. They're thinking that Tamil Nadu government is, fast approaching the Bangalore territorial area. So we will approach that area. So the development of this Anaikal side is happening so much. They're giving so much of this kind of concession, help. You can see so many concepts. Okay, tax. Okay, but tax is not a expense. Please understand. It's not a expense. But you have some another tax, no? This tax, what you're talking about, corporate tax. Corporate tax, income tax of a company. But there are so many other tax, no? All those things will come under expense as well as income. Tax, who is paying the tax? GST, who is paying? Customers are paying. You simply, you are a collecting point. That's all. Business houses are collecting points of the indirect tax, especially GST. We collect and remit. An input tax credit you will take if you are paying, if you already paid the tax on the inputs, buying. Somebody may be working on that. We'll not talk about that much now in the class. Okay, tax is out of focus now. Right, next. You won't leave me. Okay, we will reserve this. All of you, please keep this in mind. He is talking about one technical word, depreciation. Keep that in mind. We'll come to that little later. Okay, we'll come to the another aspect. Now, debt and equity. Total called as capital, no? Capital. Suppose I have 50 lakhs rupees in me, with me. I have taken another 50 lakhs from a bank and I started my business in any one of the 5 forms of business organization. Forget about it for time being. Total business is having now 1 crore cash, or it is in the bank account. Logically assume it is in cash. On the table, 1 crore is there. I just have kept a board. Okay, DSU enterprises. I kept a board, and I'm going to deal with some buying and selling of some goods. Okay. Now that 1 crore hot cash currency is there. No, what is that called? Okay. But if I bring one X person from there, can you see what is this? What he will tell? Money or cash or Indian rupee. He won't say it's a layman. It's a cash. Cash in table or cash on table. But in accounts, we'll tell cash on hand. Simply we say cash on hand, but always 1 crore, you know, wait, I can't hold it. So I'll keep it on the table or I'll put it in a locker or in a bank. If it is in bank, it is called cash at bank or bank account. Simple. You all know without bank account, we can't do any business, right? Okay. Now, in accounting only, accountant only will know what is this 1 crore. He will say it is a capital. And he will say this 50 lakhs is borrowed capital, this 50 lakh is owned capital. That owned capital may be owned by only one person or it can be by several members. Depends upon the business ownership matter. Clear? Now, capital is equal to, in our today's 10 o'clock board is kept, 1 crore is there. So cash in hand is equal to equity plus debt. Okay. The debt is one form of liability. Listen, don't write anything. After I tell you, write the equation. Okay. Now, what is debt? Borrowed money. Further, if you further you go into that, what is that? The money to be settled later. All right. Everybody will not be having a cushion to fly to UK after borrowing money from State Bank of India. Normal Indians have to repay it. Normal business have to repay it. Okay, so it's called liability. Whether you are repaying or not, that's secondary, but it is to be repayable, to be repayable, to be payable, payables, liabilities. Okay, cash is a micro form. Okay, but it is broadly called as asset. Asset. So equation comes like this. Or we have another 3 words here: asset, liability. Write it: asset, liability, and capital or equity. Just write these 3 words. I will take an equation. So equation is assets are equal to now what is how much asset in my hand now in my business? 1 crore. What is that form of asset? Cash in hand. Only one form is there. That is made out of 2 liabilities. Internal liability is called equity or owned capital or just capital. External liability is called as just liability or debt. So equation is assets are equal to equity plus liability. Can we say? Equity plus liability. Assets are equal to equity plus liability. Can we say like that? So what is the equation now in my company? Cash in hand of 1 crore is just equal to 50 lakhs of equity plus 50 lakhs of liability. What is the form of liability? Borrowed loan. Loan. It can be a loan or it can be any other form. The name, what you can use, bank loan, loan from wife, loan from MD, loan from manager, whatever the name. Right? Is it clear? Only I have told you 2 plus 1 plus 3, 6 words. That's about accounting. Accounting is about 6 words. What are they? Income, expenditure, profit or loss. Okay, either left or right, that's all. Okay, you cannot be in the center. Somebody is telling, I will be in center. I don't follow left, I don't follow right also. That is injustice. But we have only one. Of course, there sometime it may be 0, but it is highly impossible. So profit or loss, 3 words. Another 3 words are assets, equity, liabilities. Whatever you do in your business, or whatever, everything will, should, shall revolve around these 6 terminologies in accounting. This we call it as accounting equation. What's the accounting equation? Asset should always be equal to, we already written. I'm telling you the sentence form, that's all. Asset should always be equal to the sum of equity and. Is it difficult? But you will say after some time, accounts is difficult. Please don't do that. Okay, another equation. Excess of, you already written. Excess of income over expenditure should be termed as profit. If it is other way, that should be termed as. That's all about accounting. Come to now, how part of it? This is what part of it? Okay, how? Somebody was telling in the beginning financial statement. Somebody was telling from the financial statement. He was telling about profit and loss account. Okay. Our basic objective of accounting is to find out the performance of the business. Now we have to move on from the layman to little executives. Okay. Finding out the performance of the business. What is performance? Profit or loss. Performance is captured in the name of profit or loss. That's a basic objective of financial or simply accounting. Okay. Another objective, the second objective, one more objective. What's another equation we have? That equation talks about what the business own, what the business owes to others. Clear? What is own is nothing but asset. The other side, the opposite side, right side is what the business owes to others to be payable later. Money, why the business would repay the money? Paid by the owner is not the business money. It's whose money? Okay, profit is liability to the business or asset to the business. Infosys is having 2 crores of profit in the year. Too much of Infosys? Okay, Wipro is having 2 crore of profit in this year. Is it a profit? Is it an asset or loss? Asset or liability? You need accounting. It is not asset. It is a liability. Profit is the liability of the business. What is this? So far we thought profit is good for the business. Yes. Till I'm telling it's good for the business only. But it is not the business money. Whose money it is? Owner's money. The claim in the business by the owner is called as liability, but we already defined that now. We have, see, asset should be always equal to liability only, but we have not written like that. What you wrote? You have not written asset is equal to liability. Liability we broke into 2. One is internal liability. The external liability only we call it as liability. Internal liability, you call it as equity. In that way, the owner's claim in the business should be called as only these 6 terms you have to use, no other terms. The owner's claim in the business should be termed as equity. That's a best understanding. Equity. At any given point in time, you have the equation. Asset 1 crore lakhs plus 50 lakhs in my basic equation. Cash in hand 1 crore is equal to equity of 50 lakhs, loan of 50 lakhs. Now, 11 o'clock, I thought, okay, this business is not good. I want to close the business. What is this guy is very mad? Okay, no problem. For understanding, I'm telling you. We are closing the business. Now, how much the owner can take the money from the business? Only little less. You can't say this is all my business. I'll take 1 crore. Then there will be notice in your home from the bank where you got the loan. Okay. So in that way, owner's claim in the business is called as, please don't forget it. Owners at any given point in time, the business asset should be equal to liability plus equity. The owner's claim in the business is called equity. The outsider's claim in the business is called as simple. Outsider's claim in the business. Who may be that outsider? Financiers. Banks, nothing but financiers. Who investor means? There only the problem comes. So far we studied the Ramayana, but now the understanding is not there clear. I have to make it. Okay, Rama and Sita are couples. That you have to create now. Please understand, sir. The money given by the owner is called as. That's all. Okay, that's all. So that you have to be very clear. At any given point in time, the total asset minus the external liability remaining is taken by, claimed by owners. In that way, you have to understand. Okay. Now, if the business is keeping on doing good, earning profit again and again, year after year on year, it's on the profit, then the equity will increase gradually. To the tune of that profit, it will increase. Unless otherwise, that was not distributed to the owners. We already discussed and decided profit is the claim by owners. But the claim can be settled immediately. If it is settled immediately, that is called no. Profit is excess of income over expenditure. We already decided. Then how can you categorize that profit distribution to the owner as an expense? We already decided. We have a layer here. Okay. Beyond that, we've grown. This is an expense. So far is from this to this expense, 1 crore. But my income is 1.5 crore. So I have a profit of 50 lakhs. That I have to give to owner. Either immediately or I can tell them, oh, wait, we have a lot of opportunity to reinvest in the business itself. We can grow. Wait, you can say. Suppose if we give immediately, that is called dividend. We are introducing another word, dividend. What is dividend? Share of profit. Share in the profit by the shareholder. Who is a shareholder? One of the owners, part owners of the company. One who is owning a share in the company is called shareholder. Simple. Okay. So exclusively shareholder will be there only in company form of organization. There won't be any partnership, sole proprietorship, etc. Okay. Of course, cooperative form members also will be called as shareholder, but mainly shareholders are there in the joint stock organization. Is it clear? Okay. So, to know the profit or loss, we have to make some statement. That statement, we have done an equation form. No, a company will not have only one income in entire year. This equation, at any time you can solve it in a company to find out the profit, but we don't do so. Every time, after 1 minute, I'm giving a question paper and writing an exam. Is it viable? No. Then nobody will join. Sir, teaching is not there, only exam is there. Nowadays, some schools are there in 12th standard. There won't be any class at all. Only exams, everyday exams. JEE is there now for that. I think some of you might have written. IITs, NITs, SITs, all ITs are there now. They will be having these exams. So train up from the 10th standard, 11th standard onwards. Okay. 6th standard, some schools are there telling you want to be a doctor or you want to be an engineer. If you go to some of the schools, techno schools are there now. If you go there, they'll ask you, I'm a teacher, I don't know what's that. They're telling some technical words. Engineer, doctor means I can understand. They're telling some technical words. Sir, you want admission in this or that? Madam, this and that, I don't understand. What is that? Please tell me. What kind of environment we are in. So we have to prepare some statement. The equation form, I want to bring it in a statement form. Once in a periodical interval. Not a frequent, or the frequency is not more. Every 3 months once I can do some logic. Quarterly performance, half yearly performance, okay, 3 quarters performance, and then yearly performance. Logic is the same. Time period, what you are going to include in income, what you are going to include in expenditure is depending upon what time period you are preparing that statement. Okay, but normally it is compulsory to prepare once in a financial year, 31st March of every year. Financial year ends in India. Okay, we have to prepare on that day the statement. The equation should brought in to be a statement. That statement is called as statement loss or profit and loss account. Please understand, the first equation is going to be decoded in an elaborate manner in a statement for an year of a business organization. That statement is called as statement of profit and loss or simply profit and loss account. We have another equation, right? What is the equation? Capital plus liability is equal to equity plus liability is equal to assets. We have another equation. This equation is also going to be brought into be a statement. Okay, this equation, what is talking about? What is telling to us? From this equation, what we can understand? From the previous equation, we can understand the performance of the business. Performance, right? In this equation, what we can understand? Okay, Sir is bringing one more new term that is called net worth. Of course, we have to settle it now itself. Already we finished this topic, but the word I did not pronounce so far. Equity is otherwise called as excess of assets over external liability or simply liability. We already decided external liability, we don't tell in full, we tell only liability. In that way, excess of assets of an organization on a particular day over the liabilities of that organization on that particular day is called as equity, or it can be called as net worth. That's it. Net worth is equal to asset minus liability. Simple. Net worth is equal to asset minus liability. Net worth can be otherwise called as equity. That's it. Is it clear? Okay. Oh, now, so this equation talks about net worth is telling. Yes, fine. Understood. But is this talking only about net worth? The equation is not talking about only about net worth. No, it talks about net worth, liability, and assets. 3 things it's talking about. Then what we can understand if you bring this statement, this equation into a statement. What? Yes, sir. Sorry. Okay, you are telling about in which we'll bring in, but why this is required? What is the understanding? What is the message this equation or the statement is giving to us? And total equity. Very good, no? It will show about A plus B plus C. Of course, you are right, but that is layman's understanding. From that, you have to go one level further. Technically, these 3 things together, what we can call accounts. All these things are called as accounts only. Everything is accounts only. Yes, sir, exactly. Financial position. Health is little okay, correct. Ill health about health of the company. Health is neutral. Ill health is there, good health is there. Okay, in that way, yes, of course. Okay, I repeat it. The second equation can be brought in a statement. That statement is called as balance sheet. Balance sheet. So our objective is, in this semester, our objective is to make the first statement. What is that? to prepare that statement, and second statement is that balance sheet. These two we are going to prepare. Literally, we are going to prepare in a paper. Okay, in some days after the class. Okay, right. Next, it is called as financial position, equity, liability, assets. These three things put together, we call it as financial position of the company. So the basic objective of accounting is know the financial performance and to know the financial. Only two words you have to understand: position, performance. Remaining all same in the school. I repeat again. I asked this question the last semester. These two, what are the basic objectives of accounting? Answer is to know the financial performance of the business, the financial position of the business. But all your seniors are very intelligent. They write in one page to do this, to do that, to do this, to thing. All those things are ancillary. All those things are supplementary. All those things are incidental. Objective of taking the admission in DSU EMBA. Madam. Paper, no? And promotion. If possible. Of course. Otherwise, why should we see education, output-based education? Today we are talking about outcome-based education. Outcome should be there. Outcome is not there, then there is no. Of course, outcome will come out of knowledge and skill. Okay. So these two, please keep in mind. We are going to prepare. Now you tell me, how do we remember? How do we remember the income, expenditure of a business organization over a period of 1 year on a particular day? We can't remember, right? We are not supercomputer, no? We are robot like this. We can read. Okay, Savannah will come and read, and no, we can't do it. No, we are normal human being. Okay, we'll have to remember that in some means and ways. That means and ways are nothing but some accounting records. What are those accounting records? Now I want to show you some slides. We'll take some break and then assemble again. Up to what time we are supposed to be here? Not 12. 1 o'clock. For this purpose. For this purpose. 1 o'clock. So we are already exceeding the time of break. We'll take exactly 10 minutes break and we'll reassemble. By the time we'll arrange that PPT ready, we can understand further. Okay, thank you. Those are online. We are having a 10 minutes break. We can reassemble after 10 minutes. Thank you. Okay, so before we see these PPTs and other stuff in the PPTs, all of you take your mobile. If you don't mind, switch on your data. It is off. We just see these two statements live. Then we can go with the background of that. Okay. What two statements we talked about? Two names of the statement. Statement, balance sheet. Of course, what is the purpose of P&L account? Profit and loss account is to know the performance. What's the purpose of preparing a balance sheet? To know the financial position. But the statement names are profit and loss account and balance sheet. We can take one company and we can see just what they prepared for a particular year of these two statements. Which company we can take? Tata Motors? Sorry, sir? Computer company. What is it? I'm not service. Yeah, that's we go with some general companies. Okay, if you go with some specific, suppose insurance company, IT company, that will be having so much of technical concepts. While learning driving, you have to go in a normal, straight, or some good road. Okay, fine. So you take Tata Motors. All of you go to Tata website. Tata Motors. All of you go to Tata Motors website. Introduction to accounting. Okay, go to Tata Motors website and there will be an icon or a link for our investors. Okay, investors. See, one request to all of you, one appeal to all of you, whenever you want to have some data about this, you have to come and ask the respective people. If you want to know about Tata Motors, whom to ask? Tata Motors only you have to go and ask. What we will do now, we'll go and ask that broker moneycontrol.com. Hey, money control, come here. What about Tata Motors? Of course, possible. My friend may know about me. You can ask about me from my friend also. Possible. But directly, if you're asking me, the data what you're getting is complete or authoritatively authentic. Yes, authentic. Later, you cannot say the data is wrong. If it is wrong, who is given? The person only given. The blame goes to him. That's all. But if you take from the mediator or somebody, then that time the blame is on you because you did not take the data properly. Okay, go to that company, Tata Motors, and download their annual report. Annual report. Annual report of 2020-21. 21-22 is there? If it is there, download that. Yeah. 21-22 you download. Download the annual report of Tata Motors from their website. Yes, sir. These all files you download and keep it in one folder, sir. Yeah, annual report is only one.
77th annual report.
Only one report called annual report.
JLR report also is there.
77th annual report 2021-22 integrated. That you take. Okay. That you take. Just download that. Click on that. It will be a 300 or 400 page report. Am I right? Yes. Okay, 7 MB. How many pages are there? Of course, 250, 300 pages will be there normally. Yeah. 40? 446. Okay. 446 pages are there. We don't want all those pages. Later you can read if you want, just have a glance. Okay, anybody is having a share in Tata Motors? Yeah. What's the price of the share? Google will say around 410. Okay, good. Good. Anybody else having some other shares in some other company? Which company? Anybody? Investing in marketing or market or trading in market? Yeah, because some doctors are sitting in the theater, you cannot talk something because they know it. Yes, sir. Which company you are having? Somebody was telling me. Yes. Okay. What's the price now? Not exactly today or yesterday. Okay. Okay. You got it in IPO or you got it in the secondary market? Secondary market. Okay. Anybody else? Sir? Okay. KPIT you are having. Okay. Anybody else? GL. Okay. Sorry? ITC you are having? Good. So many of you are already investing or trading in the market. But anytime have you seen this statement? You will get this statement once in a year from your company. It's a mandatory of the companies to send this to the owners, shareholders. And you'll be called for annual general meeting also. And you are right to talk. And you are having a right to vote also. It's a democratic way of running a company. Okay. That you just read it later. Now, in this statement, 400 pages are there. No? In this statement, we want only two. What are they?
Profit and loss.
Profit and loss statement and
Balance sheet.
balance sheet. Just to control F or in the file, there will be a search option. No? Go there and find out in which page the profit and loss statement is there. Profit and loss is there. If you are really interested in any companies, first annual report of the company. You should know what they are. For today's environment, no Maggie. People are liking Maggie only. Dosa means it takes time. People supported with the butter also. Dosa not ready to buy that and make dosa. They want only immediate, instant. But the fundamentals are very important. What the business is, what they are doing, what and all is their profit and loss, everything you have to check. But that is not the job now. We just want to see how it looks. That's all. We are going to prepare it actually. We are now looking just what it is, how it is looking. That's all. Okay. Are you able to reach out that page? Profit and loss. Okay. In this format only we are going to prepare. Hello, gross profit. Somebody told the morning, gross profit. Somebody. There in the gross statement gross profit? No, it won't be there. It's starting with revenue from operation, use other income, total income, expenses, one by one, 6 expenses will be there, 6 or 7, then profit, that's all. Then tax, all those things go on. Okay. In this form, there be calm. If you are there, please listen very carefully. In this format only, we are going to prepare profit and loss account, because we are going to prepare the profit and loss joint stock company. For joint stock company, there is a separate enactment. Indian Companies Act 2013 prescribes the format in which you have to prepare the financial statement of the company. Okay, I'm telling one more thing. Financial statement of the company. What is that? Is two. Both put together collectively called as financial statement. What? Both profit and loss account and the balance sheet together, we call it as financial statement. Okay. The job of an accountant is to produce these two statements. The job of an analyst is to critically analyze these two statements. You may be in the second category. That means you are not going to prepare anything unless otherwise for accounting companies. Okay. And also, no company will take an MBA as an accountant, core accountant. Okay. We have ERPs, softwares. Okay. Just normal ERP. Tally is there to take care of the producing of these two statements. Okay. As an executive, as an analyst, business analyst or financial analyst, what should I do is, what should we do is, we have to critically analyze this statement. First, you have to understand what it is. We are not going to prepare in real life, but in class, we are going to prepare it because you just pilot. Pilot need not to be knowing about how the repair of that machine or something is to be done. At least if there is any problem on the air, he has to carefully bring the aircraft to the land. He should land safely. Then we have to invite the experts to inspect, examine, and make the repair work done. Similarly, you are not going to be a mechanic. You are going to be a pilot only, but you should know how the aircraft can be safely landed at the time of crisis. Unless otherwise you know some of the mechanism of the aircraft, you may not be able to land the aircraft safely at the time of crisis. In that perspective, you are going to create an aircraft. That means creating these two statements. But of course, we are not going to do the same thing in our real life all the time, right? All the time. But only to have a knowledge. How to read that statement first. How to understand the statement. How to analyze the statement. Okay. We are going to give a comment on the performance. We are going to give the comment on the position, health of the company, financial health of the company. For that purpose, we have to know how to prepare it. Okay, just read it for a minute, how that looks. Go through the two statements, profit and loss account and balance sheet. By the time I'll open your first slide. Technical aspect, technical names, what are there? Don't worry about that. We are going to study that. The skeleton. Okay, how it looks, that's it. Okay. Inside, there are so many terminologies are there that you don't worry at all. If you don't know, no problem. We are going to study about that only in the regular classes. Okay. But it is comparing the expense with the income and it is resulting in profit or loss. That is there or not, you check it. That is in balance sheet, right? That is in balance sheet. Okay. So like this, whenever you're free and you want to see some of the company's balance sheet, you can go to their website and just see. Okay. We are going to prepare, of course, another 1 or 2 classes, we are going to prepare it. By having a hypothetical data, we are going to prepare it. All right. Is there any doubt in this up to this? 6 words I told you, that's all. And I claim and I argue that all the thing what you do in accounts are in the revolve around only these 6 words. That's it. Okay. Suppose additional money is brought in by the owner of the business. What will happen in the accounting equation? Which accounting equation? 1 is about profit. Equation 2 is about position. Okay. 1, 2. Which equation will affect now? 1 or 2? Only 2. First one will not get affected by this transaction. I'm using one word, transaction. Beginning, some of you told. Now I am forced to use that. What is transaction? Every activity. Morning, going for a jogging. Any financial activity. Suppose ICICI is borrowing money from RBI. Is a financial activity of our business? Okay, that particular business. Transaction refers to any business activity which results in somebody is playing some background chant or something. Somebody calling you. Okay, he has also logged in the online class. Okay, fine. Yes, no problem. We normally test like this in the beginning. Some of you, yes, normally those days online classes, 2 years, we test. Anybody who is nearby, please log in and check whether I'm audible or is there any mistake, problem like that. Yeah, very clear. But not by testing, but by accident. Okay, come back. What we're talking about? A transaction. Any economic event that occurs in the business which involves the transfer of money or money's worth. Giving an appointment order to HR manager. HR manager, legal appointment order. Okay, giving an appointment order to production manager by the HR manager in the company. Is an event or not? Event. But it is a business transaction or not? No. Why? It's just an appointment order. Accountant does not bother about this. So he is very honest. He is MBA from Harvard. Yes, okay, no problem. He's appointed today onwards. Okay, no problem. So this is a letter. Keep it there. I'll give it to him. That's all. File it. Accountant will never worry about this particular event because it does not involve any transfer of money or money's worth from the business to outsider or outsider to the business. Then when the accountant will worry about? On the day of first day, salary. There will be a credit in his account. Okay, this is another important point. Credit in his account. They are forcefully now. I only use that once I have to explain that. You all get this SMS, no? All of us here there for SMS only. If that SMS is not there, then problem starts. SMS would be coming. What kind of SMS you got? You'll regularly get from your bank. Your account is credited by XXX for the salary of this one so month by your employer, something. But the word credited will be there. Are you accepting? Have you seen? Anybody is not seen? Then you have to quit your job and you have to go for another job. It should be credited, no. Otherwise, no meaning. Okay. What does it mean, credited? What we receive in our bank account, that is being told technically by the bank, credited. If you are receiving, somebody should give. No, bank cannot print a note and credit it. Somebody should give. Who is giving? Your employer is giving. One SMS will go to the company's registered mobile number of the particular bank account. What will be there? You also may get like that. You are going and swiping your card in some of the places. Then you'll get immediately a message. What message? Your account has been debited by so and so amount, by so much of amount for this purpose, something. So these two words are there, debited and credited. That is going to be there in accounts also. That's accounting term. Okay. What is debited? Our balance is reducing. If it is credited, means our balance is only this much you keep in mind for the relationships. Right. So transaction. Each and every transaction cannot be remembered by the accountant for one long years. So it needs to be recorded in some places. If you want to record in some places, there should be a systematic arrangement for that. Okay. And there should be a guiding element, guiding principle to make you to record. Recording is not just money received from Dr. Rajesh or so and so. That's not recording. That's all these transactions can be known to the accountant, not by telling by somebody else. Automatically, you should know. What is automatic way of knowing it? It should pop up in your system. It should pop up. Or in the manual system, you should come to his table in the form of a file. Yes, madam? It should come to the file. It should come to him in the form of file. Suppose there's a salary 1.5 lakh paid to this HR manager. How does the accountant know about this? What statement? Bank statement. Okay. But before that, he should know, no, bank statement will come only after the payment is done. Sorry, sir? Salary slip. Okay. Payroll. Okay. Okay. So you should get some document, right? Document. Evidence. You can't simply say that I paid 1.5 lakh salary to this X person. Is it paid or not? Who knows? How do we know? In accounting, that's a objective evidence should be there. Evidence. Undisputed evidence should support your record. What is the undisputed documents? A slip or the bank statement or the accountants. Those days we call accountants. The employee will come and he record in a book. Those days, the principles were God. You'll go and stand like this on first day. You have to laugh, you have to smile. Because you have to get the cover those days. Cover. I'm not talking about cover. I'm talking about cover. Okay? So that cover will be given by the principal. You have to sign. Like that in all companies also. But today that just changed into a modern system. Okay, accountants, no accountants is maintained. Only your credit to your account is okay, or the salary total statement prepared by the HR department, payroll department. They will give you. Okay, verification done, credited. Before going to credit, it will come to the accountant. He will record. Okay, what check number and what left to transfer or whatever it is, he will record that. So evidence will be there for recording. Suppose you are buying some material and you are paying some money. What is evidence for that? Invoice, exactly. Now we technically have to use the word invoice. Colloquially, we call it as receipt is different from invoice. Invoice may become a receipt later. Invoice, colloquially, suppose you're going to a cafeteria, you're going to a computer shop, you buy something, what will ask? Yeah, colloquially will say, bill accounting terminology is invoice. Invoice will talk about the items what you purchased. Okay. If you are paying money, then there will be a seal, payment received. That will become a receipt. Receipt become invoice. Okay. That is an evidence for an accountant to record the transaction. Okay. Like that, he is doing all the transaction recorded in some place. Finally, he has to summarize all the expenses, broader category, and all the income. Then comparison takes place in the profit and loss. Similar manner, he will record all the transaction. If anything of liability nature, if anything of equity nature, if anything of asset nature, that will be grouped into 3 categories separately. And that will be brought into balance sheet. So before doing this, we are doing it for 1 year now. Recording is happening for 1 year. But production of these 2 statements is happening on one particular day. It's happening on one particular day, but it covers the data of 1 year, that 1 year. Okay, so there may be some kind of errors and mistakes. Those days, it was maintained manually. Nowadays, of course, it is maintained in ERPs or some of the systems, softwares, and all is the accounting packages are there. But those days, it was manually maintained. So we have to check before we go for preparation of these 2 statements. There's a stage. Checking of the accuracy, arithmetic accuracy. What is arithmetic accuracy? Mathematical accuracy. What is arithmetic? Plus, minus. That accuracy we want to check. Then you confirm that arithmetically there is an accuracy. Everything is recorded properly, correctly. Then we start preparing these 2 statements. Before checking that arithmetical accuracy, every day, every second, whenever there is a transaction happening, the accountant keep on. Are you able to imagine this? The transaction happens. That's come to the accountant in the way of a statement or in the way of a document. From there, he identifies what transaction took place. Based on some guiding element, we are going to study about that. Based on some guiding element, he is recording that transaction in the books of accounts, and he keeps on doing that for 1 year. Okay. If needed, he will check that arithmetic accuracy whenever he wants. The same process he can apply whenever he wants. Suppose he thinks that there may be some mistake. Okay, he may just check that also. That's left to him, not compulsory. It's left to him. But before we go for the finalize, that's called finalizing the books of accounts. Accounts closing, account closing. We might be listening these kind of words, no? Accounts closure, financial statement preparation, okay, or financial year end, all these things. So before you finalize your result, you have to confirm whether the arithmetic accuracy is there or not. If there is a mistake, then there is a rectification of error. You have to rectify the error, then you have to come back and you have to prepare these 2 statements. Okay. The same thing, I will just show you in a pictorial representation so that you can understand better. This and all we will study, we will discuss later when you come for a regular class. I mean, next class onwards. Okay. I'm just giving you the overview. I'm trying to bring some interest from you on accounting. You have to love this. Then only the other things will go on smoothly. Otherwise, forcefully, if you say, it won't be working out. But don't worry, accounting is a new subject for you. It's for BCom student also. Don't worry. They might have forgotten. Don't think that they already studied 3 years. We are just new. And again, we are not going to study about in detail about everything. For a manager, for an analyst, what we need, that much. Okay. So look at this. This is the equation I was talking about, right? Resources are equal to claims. What is resource? Resources means resources. Business resources means what? Assets. Owned. Then claim. Claim is owed. Okay. Resources. Cash is equal to capital. If I don't have any borrowings. Okay. The same thing, decoding of that. Assets should always be equal to liabilities plus equity. And equity should be always equal to asset minus liability. Simple. A is equal to B minus C. B is equal to A minus C. That's the same logic. Okay. Equity is equal to asset minus liability. Then liability should be equal to asset minus equity. This we already discussed. Yeah, this is what I want to show you. This is the accounting cycle. How the entire accounting works. Okay. There's a transaction or there are transactions. One side. The transaction comes to the books of accounts. Now we have to study what are those books of accounts. There are two ways of maintaining books of accounts. I'm not telling about manual and computer. In both the ways, either manual or computer, we have two systems of maintaining books of accounts. One is only journal, another one is subsidiary books. So far, we talked about books of accounts, right? Recording, right? Those things are going to happen in the first stage of it. First process of accounting is identifying your business transactions through documents. Okay, salary slip, invoice, receipt. Okay, voucher. You know voucher, no? Voucher. The person will not give you receipt, but we will create one document and ask them to sign in the document for the money what he received from the business to show as an evidence in the accounting. So voucher, document, any other documents, or bank statement, or check, all these things are going to be the documents for us depending upon the transaction. So based on the documents, the accountant job is to identify the transactions. Accountant job is to identify the transactions. Okay. After identifying the transactions, he should decide what method he is using, what way he is going to use, either journal or in the subsidiary books. Both cannot be used. Bigger organization will go for subsidiary books. Small business, very small, tiny business, micro business will go for journal. Okay, I'll tell you what it is. Okay. And then if you record either in journal or in subsidiary books, in both cases, it should get summarized into the next level that is called posting into ledger. Transactions were recorded either in journal nor in subsidiary books as the case may be. After doing that, that should come to the next level that is called ledger. Why we need ledger? Suppose rent, you are paying rent. In journal or subsidiary book, you can't find how much rent you paid so far. The accumulated rent, what is paid so far on a particular day cannot be found out. Because it's a transaction. In one single day, there may be 20 transactions took place. One among them may be rent. And rent may not be paid every day. Once in a month. So we have to search all transactions to find out where is rent. And then you have to add. Instead of doing that, we prepare one ledger for rent. Similarly, for all other types of accounts or heads of account, it's called heads of account. Rent is called head of account. Salary is another head of account. Head of account. Name. We only name it. Who name it? The accountant will name it. Logic. Based on some broader accounting principle as well as his own what you can say, comfort, his own decision, judgment. We'll come to that. So ledger, if you go to ledger, in ledger we can identify what account has what amount of balance. Understand about balance. Balance means what? From something, we minus something, we will get something else. That something else is called balance. We'll do that. Balance. Rent, how much paid rent? So what's the cash available today? Please tell me. I can't go and check all the dates. So cash was 1 lakh, then we paid 2 lakhs. If we do like that, 1 year over. The owner will be changing the account. Okay. So what should you do? You have to go to ledger and you have to find out cash account. How much is there? Cash. So 2,22,000 is there. Yeah, grouping. That grouping and summarizing is taking place in ledger. Just blind recording is happening in subsidiary book. Sorry, journal. In subsidiary book also grouping is happening. I'll tell you what it is. Okay. See, if your company, if your organization is very small, ledger is one single book like this. You have one book. Every day you will write one after another. Every day. Suppose 2 transactions took place today. You will write 2. Tomorrow another 2. You will write another 2. It is easy. But another organization is there which is having 1,000 transactions a single day. Like this book. So I'll buy a bigger book you can buy. But in one book, at a time, one only can write. All right? Otherwise, you can write in a group, then we can bind it. That's possible, but that will lead to some kind of confusion. So people invented another system called subsidiary books. You will write only sales. So you will write only purchase. Out of this 1,000 transaction, we group it. Division of labor. Okay. You write all the cash transaction. You write all the cash bank. They are twins, right? They are twins. We can't separate them. Okay, they are twins. You write sales, you write purchase. Okay, like that. We touched upon. We just classify what are they. All purchase of merchandise will be recorded in one book. That clear? One of the subsidiary book is called purchase book. What do you mean merchandise? Which is bought for the selling or for the purpose of processing in the business. Yarn, cotton for a textile mill. If you buy on credit, again I'm touching on the point called credit. What is mean credit here? Without giving money, you have just promised the supplier, you give the material, I will pay you later. If you do so and you are able to get material, that is called credit purchase. It is credit sales. If you are doing any of that credit purchases of materials, you have to record in one book. That book is called purchase. Sir, if I pay money and buy, then where should I write? I should not write it in purchase book. I should write it in cash book. All transactions related to bank and cash should be recorded in one single book. That book is called as cash book. Yeah, cash book. Irrespective of what you paid, donation. Suppose the election is going to come, 2024. Some people are coming and asking you money. Sir, give me 1 crore donation. Nowadays, donation is compulsory. And also, it is we need not disclose to who, from whom you got it. See what that is going to be against for me only in the next time. Congress started this point of donation concept to the parties. Now BJP is getting so much of money from so many companies. The CSR money they're diverting to contribution to the political party. Some academic research is going on and the debate is going on. Just to touch upon that. Okay, anything what you paid. The donation I paid. Whatever Nagaraj has come to our business, give me 1 lakh he has given. Where to write? Donation. Sir, I bought materials on cash. Cash book. Okay. Sir, I paid money into my bank account. Where should I write? Cash book. In both the side. It is affecting cash also, affecting bank also. Bank balance increases, cash balance decreases. So anything or everything related to cash and bank transaction, I should record in one single book. That book is called as cash book. Over. 2 books over. Third book, sales book. What is sales book? Selling of merchandise on credit to be written in sales book. Only credit. What does mean? What do you mean credit? My customers, I know them. I am giving the material. I am selling the material. I did not collect money now. I will collect later. Collection from debtors will be written in which book? Cash book. Sales to customer on credit will be recorded in sales. Clear? This concept, basic concept. Okay. Sales book, purchase book, cash book. Over. Another two books. Returns book, meaning purchase return, sales return. What do you mean by sales return? Our customers are coming with defective goods, what they bought from us, and returning to us. Sir, I bought 1 lakh worth of goods from you, 10,000 units. Out of that, 100 units are damaged or worthless. Please take it. If they are giving like that, we won't give them immediately cash. How many units? 100 units. Take this. No, because he has to give us money, 10,000 rupees. From that, we will minus. Don't give me 10,000, minus the worth of these 100 goods, 100 units, and then give the remaining. That is a transaction actually. Okay. That need to be recorded in one single book. That book is called for sales returns book. Sales returns can be otherwise called as return inward. It's coming in, no? Return inward. Return inward book or sales return book. Clear, sir? Next, what you will do with that product? You will go and return to whom, from whom you bought it. That another book. That book is called return outward books or return book. So purchase book, purchase return book, sales return book, cash book. 5 books are over. Now next, sixth one. Okay, sixth one. Suppose you are selling the goods to your customer. He is not paying the money today. He is going to pay after 2 months. How do you believe them? Yeah, true. They have a big building in UB City. UB City is there. Big building. But you are not giving the money. How do I believe? Sir, this is my building. Okay. Can I give the money? Having good financial position is not guarantee that you will get back the money. Or it's not the evidence that you give the money, you gave the money to them. Then what is the evidence? How do we transact in the business, normal business? I'm selling you, I have raised an invoice in your name, worth of 1 lakh rupee. You are telling, sir, I don't have money today. I'll pay you after 2 months. Agreed. Accepted. Terms and conditions accepted. You are my customer. I know you for the last 2-3 years. Accepted. But only accepted. Okay. But how do we transact this? Promissory note. Am I running a financial company? Promissory note is a document. You know, promissory note. If I take money 1 lakh from madam as a loan, she may be asking me to give a signature in a note. That note is called, I promise on a note to return back 1 lakh rupee along with 2% interest and so on so date. That's called promissory note. Promissory note is an evidence for me. But here in our case, was there any lending money? No. What I did? I just transacted my normal business selling. Then what should I collect? Credit note is different. Yes, sir? His bank statement is just a tissue paper for us, no? Yeah, now you are taking me to a technical aspect. I'm not having any idea about that. You have some technical usage in your companies. I agree. But technically speaking, we need an evidence. That's all. We need an evidence that he has to give us 1 lakh rupee or 10,000, whatever the. Okay. Invoice itself is an evidence. Unless otherwise you paid cash received. It's a document. But that is not enough. He may say that you did not put a signature, seal, stamped it. You can say. So, in addition to raising an invoice in his name, invoice is a document only for the purpose and an evidence for the sale. That's all. Suppose RTO is standing there in the electronic Achipalli gate. If you're going with some kind of goods, from it is coming and where it is going, you have to show the invoice copy. It was prepared in triple copies. One is with the buyer, one is on the transit. Okay, so that is for that purpose. And to record the purchase, he will use the record the sales, I will use the invoice. But money is paid or not paid. One more document. Then accountant will know, no. One more document will prepare. The document is called Bill of exchange. Bill of exchange. Simply we call in accounting bills. Suppose you raise a bill of exchange in the name of one customer to whom you sold goods with all the conditions, date of maturity, everything. Okay. You will ask him to sign. He will sign in the document. Now, what is this second document? This is evidence for money to be payable later. It's not evidence for purchase. How that money has come? Through purchase. So that is an evidence. If you raise a bill of exchange, if you draw a bill of exchange on your customer and asking him to sign and getting that document, you will keep the document with you until he clears that due. On the day of clearing, you have to return that document. Okay. Once. Yeah, please. Only two parties, buyer and seller. That's it. That's it. Just an evidence, that's all. In promissory note case, lending, here it is product sold. So we are raising a bill of exchange. We are drawing a bill of exchange. Now, as soon as your customer accepts by giving a signature in the bill of exchange, it comes to you. That need to be recorded. That will be recorded in a separate book. That book is called, that's it, bills receivable book. For you, it is money receivable, bills receivable book. Suppose you have a credit, you have a supplier. You did the same thing with him. He wants your signature in a bill of exchange. You are giving. He will get in the copy, and one copy will be there with you also. Okay. That time you have to write that transaction in another book called bills payable book. So receivable book, payable book, bills payable, receivable. Okay. You have to understand. Even if I do not collect bill of exchange also from a customer, he is going to pay the money. But bill of exchange is for little safer purpose. And one more purpose is there in bill of exchange. Anybody can tell? Why do I collect bill of exchange from my customer? Only for the safety purpose, guarantee purpose? That is okay. That is there in the sales ledger only now. Okay. Last class we'll discuss this. Okay. Fine, but you are connected. You are little close to the point, but no, I'm asking about purpose. Why do I ask my customer to sign in a document and return to me? Legal binding is okay. First case, it's done for the safety purpose, guarantee purpose, evidence purpose. Of course. In addition to that, there is one more purpose. Sorry? Huh? Yeah, I can know the date when the payment can be done.
Record the transaction.
Okay, fine. Then recording the transaction. I'm asking about the transaction only. Why the transaction happening? After happening, only you have to record. Yeah. Okay, accepted. Accepted. Yeah, that's why we need that. Yeah, it's not liability for us, it's an asset for us. Actually. Asset. Receivable is an asset. Yeah. Anybody? Or not doing this in your companies? Anybody? Sorry, sir. It's not cash equivalent. No, can you give that bill to? Of course, you can endorse somebody else to whom you have to pay. But normally they won't. I mean, that practice is not there nowadays. Those days it was there. Just like a check, you can endorse a bill of exchange and you can give to others. Suppose I have collected bill of exchange from him for 1 lakh. I have to give 1 lakh to him. I can give the same bill of exchange. I can just endorse that to him. I will sign and give to him. He can get the money from me later. Just like a, what you can say, negotiable instrument, right? Just like a rupee note. Rupee note is a promissory note. Please understand. Your rupee note is a promissory note. Who is promising? RBI is promising, not Government of India. Okay. Okay, come to the point. Why we need this? You have to close it now. Just a promise. Okay, fine. Understood. Will that promise be helpful for you in any other manner? Except that knowing, or except that guarantee, except that evidence, except that. Even if you do not collect the bill of exchange from your customer, it will be there in the name of debtor. I'm bringing another word, debtor. Who is debtor? Unpaid customers are called debtors. It will be there. Okay. Okay, true. But mainly, you have to wait for 2 months now to collect this 1 lakh. What I will do is, I will just, yeah. That I told you already, but it's not much in practice. Nobody will accept, no, sir, who is this X? I don't know. You give me a check. I don't want a promissory note endorsement. You give me a check. I'll collect it from your bank, or I put for a collection in my account. That's a practice. Can be done. But the thing is, you can go to your bank by taking all your bill of exchange on a good day and give it dump to the bank. Sir, these are all the bill of exchanges I have in my favor. Total amount is 1 crore 2 lakh, 1 crore 20 lakhs. You give me 1 crore 20 lakhs. You collect from them later whenever the due is. It is possible. That is there. People will do. That is called discounting of bill of exchange. 1 crore bill of exchange papers, bank will collect from you and it will give you 1 crore 15 lakhs or some money depending upon the market interest. Okay, they will give you immediately cash into your account, into your current account of business. It will come, it will be credited. That 5 lakh is called as discount. The business for the bank. For you, the requirement of money is immediate. If you go and ask a bank, sir, give me 1 crore 20 lakhs, they may not be, they will hesitate to give. They have so many process. But this means easy. Already there are people, you can collect from them whenever the due date is there. Okay. So to record this, which book you have to use? Bill of exchange. Discounting of bill of exchange is taking place now. We gave some bill of exchanges to the bank and we got money from the bank. It's a transaction or not? Which book you have to record? Cash book you have to record. Cash book. Column you have to record. Okay, right. Good. Next. How many books over now? 6. Ask. No, you did not make the money to sell by selling your product. Your customers are still not paid the money. Who has paid the money for you? Bank has paid the money for you. For what bank has paid? Based on the bill of exchange. No. Why are you confusing? Sales. How do you know that customer will go and pay the money to the bank? What is the guarantee? Yes, you have given a loan. The banker has given the loan in the form of cash or in the form of bank account. So it should be recorded in cash book. That's it. Simple. Bill of exchange can be created even without a sales also. Now we are going to the nuances of the business. Tricks. See, I want one to see. There was one small comedy in Tamil movies now. Both of them are hungry. Both of them are not having money. But both of them have to eat. They play one trick and they will eat and they will succeed. Similarly, you need 10 lakh rupee. You are coming and asking me, sir, can you lend me 10 lakh rupees? Yeah, come. Normal one, what they will say? No, I don't have. Sorry. But these tricky people, what they will do? Okay, come. He does not have money. Come, I'll give you 10 lakh rupees. Sign in this document. Similarly, you make one bill of exchange in my name, 10 lakh rupee. Both of us will go to their respective banks. We'll discount the bill of exchange. You get 9.5 lakhs, I'll get 9.5 lakhs for nothing. This will go on forever in good manner, unless otherwise both of us should agree, honor the bill on the date of due in our respective banks, opposite banks. In his bank, I have to go and pay. In my bank, he has to come and pay. In this way also it is possible. So what I'm trying to say is it's not only about sales, it's about the document. Okay, that's why it is recorded in cash book. Okay, next. How many books? 6 books are done? 8 are done. What are they? Sales return, purchase return, cash book, receivable book, payable book, cash book. So 8 books were done. Suppose there are some transactions which are not eligible, which are not qualified, which are not able to be recorded in any one of these 8 books. We have to go with the journal only. Sir, again you are telling journal to avoid. One second. Sales return. One second. Yeah, please. Yeah. Bills receivable book. No, 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 no. It's right. Only the last one is not there. That's it. Please, I'll do that. Purchase book meant for recording only credit purchase of raw material and merchandise. Purchase return book, sales book meant for recording only credit sales of merchandise, sales return book. Okay. Then cash book to record all the cash transactions. Okay. Next one is bills receivable book. Another one is bills payable book. Yeah. 7. Right. Next one. Suppose you are not able to record any transaction in any of the books. That time you have to use only journal. Sir, you told instead of journal only we are using subsidiary book. Then again you are going back to journal. Now chances of recording in journal will be very, very less because everything we are grouped into so many categories. Say for example, sale of old machine. Sale of old machine on credit basis. Where you can record. What is sale of old machine? I am a producing company, manufacturer. I have used the machine for 10 years. Now it is not of use. I have to sell it, scrap it out. I scrapped. But the person who bought it is telling, I'll pay you after 2 months. Okay. Instead of occupying some place in the company, I'm just disposing it out. Where you can record this. It's not a sales, right? Please understand. In accounting, sales is different. In English, sales is selling of everything is sales in English. But here sales means only the core what you are doing. That's called sales. Furniture company will sell only furniture. Of course, they will say they will sell old newspaper. That is not to be called as sales. The newspaper is not meant for sales. The newspaper is meant for using in the office, and later on it is lying dumping on some place. We are just disposing. We are getting some money. It's other income. That's not. Yeah, only the product, only the core operation of you will result in sales. Okay, say for example, Dayananda Sir University collects fees from MBA student. That is a core business, core area, core operation. Suppose this place is empty, I mean, not used for some days, it is there. We are letting it out for some function. Some educational function is happening. Letting it out, we are collecting some money. That is not revenue from core operation. Okay, right. So if you have this kind of transaction, that should be recorded in journal only. That time it is called journal proper. We don't call just journal, we call it as journal proper. Okay, journal proper. Journal only. In the place of journal, we maintain all the subsidiary books, but we record some transaction. That time we maintain normal journal. We call them as journal proper. Okay, right. The theoretical understanding is fine. Next, grouping is happening, summarizing is happening. Okay, totaling. Layman understanding. Totaling is happening. How much rent? How much sales? In sales book, can you come to know what's the sales of the year? Now, if you answer, I can understand whether you understood the subsidiary book or not. No, no is the correct answer. It will show you only credit sales. It does not talk about. So we have to prepare one ledger. There you have to bring all the sales together, then it will become total sales. Okay. Right. Similarly for purchase also. Right. So we are preparing a ledger for this purpose of summarizing, and then the arithmetical accuracy is checked in the next stage by preparing a small statement. That statement is called trial balance. Okay. So if it, yes. That's left to you. You can update once in a year. You can update once in a second. That's nowadays it's automatically updated. No, I have not worked on that, but we have seen the demos. But it is automatically updated. Yeah, okay. Instantaneously. You can prepare the balance sheet every second also. That's the beauty of this today's IT. Okay. And you may ask, then why all these things? We are not going to write anything anywhere. So why all these things? So there was a problem. GST, some changes were there. No? Tally. They were doing it for months together to incorporate the change. Without knowing the basics, we can't program it. You may be good in programming. You may be good in all this, what you can say, that coding, Nowadays coding there. All those things you may go in, but the basic logic should be understood. Okay. And again, you have to analyze. It is going to give you the statement only. Two statement you're going to take it. Yes, how it is, you have to analyze. Okay, that purpose. Okay, so it is not like any time manual accounting, regular basis, you have to do it. Okay, right. Nowadays everything is F1, F2 only, no? Right? F1, F2, F3. Okay, fine. So ledger, trial balance. After that, everything is fine. Arithmetical accuracy is fine. Then I have to prepare financial statement or final accounts. Okay, what are the profit and loss account? These two put together, we call it as financial statement, final accounts. Okay, if there is any problem in this stage, is any problem, I have to rectify, I have to identify what is the problem. That's called rectification of errors. I will go through the journal or ledger where the error is there. I'll find it out. I'll rectify. Rectification means not like taking a ink eraser and then erasing it and writing another amount. No, we have to pass new entry. Now we are entering into another term called entry. Entry means whatever you are writing in journal and subsidiary book is called entries. In mind, we can see later. Okay. So we cannot just erase an entry. We cannot just alter an entry. We have to pass another entry to rectify the mistakes, rectify the errors. Okay. Even in the today's, computerized era, it is there. Instead of Mohan Lal is a customer. You will write it in Mohan's account. Possibility, sir. 10,000 rupees. Okay. Invoice you have to only record. No. 10,000 is writing 10,000. 1000. Stopping. Some attraction is there. He's sitting there and stopping. 10,000 has become 1,000 entered. But it will automatically shown immediately because two places now. Yeah. Next stage. Double entry bookkeeping. Each and everything is recorded in two places, not twice, two places. Mohanlal is our customer. We are selling goods to him. In Mohanlal account, it should be reflecting. If it is paid immediately, cash account, it should reflect. Another place where it should reflect is sales account. So that's what double entry bookkeeping system. What is bookkeeping? Maintaining journal, subsidiary book, ledger is called bookkeeping. Keeping the book in a proper way. Bookkeeping. So 1,000 will be there in Mohanlal account. 10,000 will be there in the sales account. It won't match. Automatically it will display a message. Then you will correct it. Today, those days we have to wait for till the trial balance is completed. Then you have to correct it. Okay. So this is a broader understanding of basic. Okay. Any doubt up to now? Are we having some more time? Yeah. Any doubt so far?
So
Yeah.
record for like Mohanlal will maintain all.
Yes. Yes. Not a separate book. Okay. In those days, in a single book, some pages. Page for Mohanlal, 20 to 30 page for some other lal, like that. Okay. But nowadays, each and everybody will have some memory storage space. When you create an account, you will have group of accounts. No, Mohanlal will be customer, so customer account, like that. Okay. Any doubt up to now? Any terminology you come across so far in the newspaper or in some other places that you want to ask? So this is the concept I come across, but I don't know what's the meaning of this. Anybody? Contra entry, I don't know. No. It's outside, it is outside the syllabus. That's the first answer. If I stop there, then he will say you don't know. So, simple. We already discussed that. If I deposit money, if the business deposits money into the bank account of the business, cash balance reduces, bank balance increases. No, these two need to be captured in the cash book itself. Cash book is the only place these two need to be captured. So in cash column of the cash book, we have to reduce. Okay. In the bank column of the cash book, you have to write it. Both the side of the cash book, if you write the same transaction, that is called contra entry. One debit, one credit will be there for the same transaction that will appear in the same book called sales book. It's only, I mean, cash book, that's only possibility. Other way, no other place contra entry comes, I think. So that's a contra entry. Okay. We are not going to prepare a cash book. We are not going to prepare any of the books, subsidiary books. We are going to prepare only some journal, because I want to give you 10 marks or journal. Some question may ask in journal. So journal, we will prepare. Subsidiary book is nothing but just writing all the items in a same page. That's all. You can see. I have a request to you. If you really wanted to learn accounts, take the NCRT book, 11th standard book. Don't think that, sir, we are executive MBAs. You are telling us to go back to 11th standard. Nothing wrong. So go to NCERT website. National Council for Educational Research, something is there, no? NCERT. Okay. Go there, download the 11th standard CBSE accountancy textbook. I think only the textbook prepared by them is CBSE, for CBSE only. So download the book, read the first 2-3 chapters, just like your story, comics, something you read, no? Or Facebook calls you read, no? Like that you read it. You'll get to know so much information we have given now, we have discussed, we have come across, that will help you to understand in a better manner. Okay. What is, don't go by definitions or something. Read, understand what it is. Broad understanding is important. Now this should be there in always in your mind. This flow chart. In your language, you'll say flow chart. No? Yeah, flow chart. Right? So this flow chart is complete. Yes, too. Balance sheet and profit and loss account. It is going to be given to stakeholders of the company, mainly the shareholders. It is compulsory actually. For a listed company, for a public limited company, it is compulsory to give this statement to the shareholders annually. There are some days, within that day we have to give. And it should be published. If it is a listed company, it need to be published in the newspapers, in their website, in dailies, or some of the financial dailies. They have to publish. It's compulsory. Not that 400 pages. That 400 pages should be available in their website. Only the 2 statements need to be published in the newspaper. You might be seeing April, May, June, the 3 months, so many balance sheets will come in the newspapers. Companies will have to give it. Yeah. Yes. No problem. No problem. Sales is different, bills receivable is different. When you sell on credit, you will write it in sales book. Correct. Believe that buyer. If you don't believe that, you want a double guarantee. Meaning, later I want some evidence to collect the money from you. In addition to that, I told one more thing. I want finance immediately. I want a liquid capital. I want working capital immediately. For that, I will force you to give a bill of exchange. Both are 2 different transactions. That is why it is written in 2. Bill here refers to not the invoice. Bill here refers to a negotiable instrument drawn by the seller on the buyer for the amount he has taken from, for the goods he has taken from the seller. That's why it is written. Okay. Yeah. So after this only we have a lot of analysis for you. We have to play a role on that. After this accountant over, after this mathematics starts, how to fix the relationship between one to another, how the company is healthy or not. What is the company? Can I buy this company's equity share? Somebody told, no, you have bought the equity shares of the company. What is equity share? Capital is capital only. It depends upon the ownership pattern. It is going to be prefixed with some words. Partners capital. Okay, just capital. In sole proprietorship, just capital. In partners business, A is capital, B is capital, C is capital. Because if you put capital only, there's a confusion. Whose capital it is? There are 3 partners. A is capital, B is capital, C is capital. You have to name in that way. Prefix the one's name. If it is a company form of organization, there may be thousands of owners. We can't write. And again, thousands of owners is one difficulty. Another one is today she will be owner. Tomorrow she will sell to someone else. I don't know. Of course, I will come to know later. Then how many times I will change the name in the capital? I can't do so. It's a practical difficulty. So what I will do, accountant, what they are doing is for their comfort, they put all together only. Equity capital, share capital, first share capital. Okay. Then how do I know whose capital it is? They will maintain a separate record. That's not accounting record. That's separate record. The name of the shareholder will be written there. How many shares they are owning as on that particular date. Suppose today I am announcing dividend. I will take the according to that record, I will dispatch the money to their address or I will credit in their bank account. You might have sold the share yesterday. You will get a still that guy did not update his record in his name in the books of accounts. That's shareholders books. Okay. Then dividend paid. Okay. I was missing that point. What I was talking about? That's something. Bill of exchange is over. Yeah. Equity capital. Yeah. Share capital is there. No. Now, share capital can be of two types. Some people know they don't want to take much risk. What is risk here? Sir told no, he was investing in LIC. LIC is not doing good in this context. Okay. So if I don't want to take this kind of risk, I don't invest in equity shares. What I will do, I'm ready to give you money. I have 1 crore, I'll give you. But don't take me as a owner of your company. Okay, are you a lender? No, I'm not a lender also. I want to be a hybrid investor. You give me dividend when you have a profit, but the dividend should be fixed rate. Fixed rate. It's kind of hybrid. Loan, if you take, what should you do? You have to pay interest. The loan giver will take interest irrespective of profit or loss of your business. That's one characteristic of loan. And interest for that is fixed, normally fixed. These two are characteristics of loan. Ownership capital. If profit is there only, you can get dividend. That also company wants to give. Microsoft was not giving any single penny as dividend up to 1990s. Growth company will not give dividend. You will study the next semester. Growth companies. They want grow. They don't want to distribute the money. They will have. Okay. They will keep. They will reinvest. So dividend you cannot get it if there is no profit and also if there is no decision of that profit. Okay. So I don't want your interest. I want business profit, but I want to be a little more safe in between the loan and ordinary share. Equity share is otherwise called as ordinary share, common share. In America, they will call common stock. In India, we call equity share. Okay. In between these two, there is one more share that is called preference share. Preference share. Preference. Some preference are given to them. Suppose the company is going to be closed. Company is closed. First money to be returned to preference shareholders among the shareholding pattern. Of course, government dues, all those things come very far. Okay, then loan, secured loan. What is secured loan? Loan secured means you have given some property as a collateral. Money also you can sell and the money payable to the creditor will go first, remaining money will come to your account. That's called collateral security. All these things are coming. Then finally, when it comes to shareholder, you have to give first to preference shareholders. Then only it will go to equity shareholders. Okay, that's called preference share and equity share. Okay, these are the very basic aspects. Any other thing you want to ask in this so far discussion? In the ledger based on the yeah, of course, yes. In ledger you have to prepare all the accounts again, but posting is easy. Instead of taking individual sales, you can take the total of sales book. That will be the total of credit sales. Remaining cash sales will be there. That will be there in the cash book. You will have to collect one by one the ledger of sales book, sales account, then total of sales account will be maintained. Yeah. If you take a sales account, you'll get the total of sales made in the particular period. Yeah. Okay. Income and expenditure we discussed now. I'll come back to that equation. Another 10 minutes. Okay. Income and expenditure. Suppose, yeah, now I'm coming to your point, the investment, something you told, no? Now we are connecting that. I have invested 1 lakh rupee in my business. Okay, I bought goods for 2 lakhs, possible or not? Possible. 2 lakhs, I purchased goods. I sold the same goods, all the goods for 3 lakhs. No more expenditure. What is the profit of the company now? 1 lakh. Right? How do you find out this 1 lakh? Sales minus purchase. How much was sales? How much was the sales? Purchase? 2 lakhs. So 1 lakh. So my invested 1 lakh rupee. You did not do anything on that in this equation. You should not worry about the 1 lakh. We need to worry. You already worried. Before the break itself, you worried. You know, what is the terminology? You told that. I think somewhere there you only told it. What is that word you told? No. Yeah, somebody told from the depreciation. Please understand. This 1 lakh rupee, what I brought in the beginning as capital to the business, might have been changed its form, maybe in the form of building, maybe in the form of furniture, fittings, machine, maybe. We don't know. We have to know that value of 1 lakh, what you brought in the beginning to buy some of the assets, will not remain the same today. All right. Suppose you're having 2 sales executive. You brought 2 bikes for them, 50,000, 50,000 each. Okay. What is the value after this 1 year? That same bike. Market, it will be more. Give me 1.5 lakhs, I'll give you the same bike. Or 70,000, I'll give. But if you go take this bike and tell, sir, I want to sell this bike, it will be definitely less than 50,000 or less than the price what I bought. That difference technically called as depreciation. Those who are new to accounts, please note down the word depreciation. I'm not paying anything to anybody now. It's only a book entry. It's only a adjustment. It's only a logical thinking. Because later on, if I 2 years, 3 years down the line, if I sell the bike, I may not fetch the same amount. So that's also my expenditure. Buying a bike by spending 50,000 is called expenditure or not? Expenditure. Do you take that expenditure into your minusing from the sales? No. So it is not expenditure. Buying a bike expenditure in general, in accounting, it's called as capital expenditure. What is capital expenditure? Confusing? Capital expenditure. What is capital expenditure? Any expenditure that creates fixed asset. Now these 2 equations are going to be referred here and there, some words. I'm using the word, you see. Any expenditure that results in creation of fixed asset. So you should ask me immediately, sir, what is fixed asset? What is fixed asset? Any asset which is going to be used in the business for a longer period of time to generate revenue. Generating revenue or not, it's not, it is expected to generate, supposed to generate. Okay. So that is called fixed asset. So that expenditure you should not add in the equation. Income minus expenditure, you should not include that 1 lakh rupee in the expenditure. But you have to take the portion of that 1 lakh rupee, which is supposed to be reduced, which is supposed to be spent in this particular year. Are you able to understand? That portion is called depreciation. So depreciation is one of the expenditures to be added in the total of expenditure to minus from the income to find out the profit. If you minus the expenditure, minus the depreciation from the asset value, then you will get the book value of that asset today. Book value. It's not a current value. Suppose you bought the bike for 50,000, you minus depreciation. So how do you find out that 5,000? I'll tell you later. We have logic. Okay. You minus 5,000. Now, according to your book, according to your balance sheet, in the balance sheet asset side, you will show bike 2 numbers, 90,000. That 90,000 is called as capital. Book value. The same 1 lakh will be there in the other side. What liability side? Capital. That is called liability or capital equity. Okay. 90,000. Suppose you take these 2 bikes to the market. If you sell, It may be for 95,000 or it may be for 85,000. That is different story. According to our understanding, the value of the bike used for this particular year is 10,000 in total for 2 bikes. That need to be minus from my revenue to find out the profit. Clear? So expenditures are two types. One is capital expenditure, another one is revenue expenditure. What is revenue expenditure? Any expenditure which are recurring in nature. Recurring in nature, which are helping the normal operation of the business. Payment of salary to the staff is called revenue expenditure of a college. Payment of rent for Infosys, it's a recurring expenditure, revenue expenditure. Revenue, which is going to help the revenue generation of the business, is called revenue expenditure. It will occur again and again. Landlord is coming and asking you rent. Sir, last month only I paid, na. Then he will say, please move out of my premises. That's called recurring in nature. Rent, you have to eat every time, 3 times or 4 times, 5 times, single time. Okay. That recurring is there. Even single time also recurring is there now. Tomorrow, one more time. So recurring in nature, revenue expenditure. In that equation, income minus expenditure, that expenditure refers to only revenue expenditure. Depreciation is the part of capital expenditure brought as revenue expenditure. So that portion of fixed asset minus in the income is called depreciation. Okay, right. Come to the another equation. Sorry, the same equation. Income is there now. Income. There are two incomes are there. Capital income, revenue income. So what is that? Revenue income. Yes, revenue income. Sale of goods. We get money from the customer. No, that is called revenue income. Income, revenue, or revenue income, whatever the way you say. Revenue income. Suppose government is coming and giving you 1 crore for appreciating you that you have done something for the society. You have created job opportunity, or you are in some CES, special economic zone. Those days they created. No? Yeah, SEZ. They are there in the place. They are giving some grant. Okay, or some of the people are coming and giving you some donation. You are in a social entrepreneurship mode. Social entrepreneur, you are doing some business for a social cause. Okay, for that they are giving you some money for you to support your business organization. That is not a revenue income. That is a capital income. Okay, similarly, you borrow some money from a bank. It's not income. It's a capital receipt. Money collected from the customer is a revenue receipt. Money collected from the bank as a loan is a capital receipt. Borrowing, capital receipt. The difference you should know. Only revenue income minus revenue expenditure is going to be resulting in profit. So whenever I say income, I refer to revenue income. Whenever I say expenditure, I refer to revenue expenditure. If I use the word capital expenditure, that time only I'm using capital expenditure. Otherwise, expenditure refers to normal expenditure of revenue expenditure. Okay, clear? Any other point? Any other words you come across in the normal, I mean, news or newspaper or some of your friends? Yes. So second equation. Now we are coming to second equation. So before going to that, in the second equation we have 3 words now: asset, liability, equity. Asset can be of 2 types: fixed asset, current asset. What is fixed asset? Any asset which is going to be used in the business for a longer period of time. It is not for sales. It is kept in the business for the use of the business. Example, furniture of a college. Furniture of Fatima Furnitures Limited is an example for inventory. That's a current asset. Inventory is one of the components of current asset. Then what is current asset? It is not just furniture all the time. It is current asset. We cannot say. In general, okay, but furniture kept in Fatima Furniture Limited is current asset. It's not a fixed asset. Furniture kept in Dayana University is a fixed asset. Okay, so in that way, you have to classify the assets into current asset and fixed asset. There are so many other classification of assets. One of them is tangible and intangible. You know the meaning of tangibility and intangibility. No? Same manner, you have to suffix the asset. Yeah, I'll tell you. Tangible assets are those assets which can be touched, seen, touched and seen, and have some physical existence. Example, furniture again. Okay. Another one is intangible asset, which cannot be seen, which cannot be touched, which does not have any physical form. Example, copyrights. Goodwill is not a. Okay, goodwill is intangible of intangibles. In my understanding, goodwill is intangibles. It's very rare. You will say, sir, I'm very honest. But you should not say. Who should say? Others should say. We'll discuss that in another day. Keep in mind, we'll discuss that. If your balance sheet has lot of amount as goodwill, the company is a good company or not a good company? That word we should not use academics. Yeah, is a good company or not? We can. It is not a good company. But please don't think in another way. I'll tell you, since we touched only one sentence. It's created in the books of accounts only when you buy an existing business, you buy a running business by paying more than what it worth. It is worth 2 lakhs worth of business you are buying by spending 2,20,000. Why you are buying like that? Are you fool to buy like that? No. Why? You believe that that business is an ongoing business. To set up that business, we need some time. It's an ongoing business actually. You have a ready-made customer. Readily customers are available. Only you are going to put one word new. Aravind Mills. You are going to put new Aravind Mills. That's all. The same business is going to continue. That new will be very, very micro, small. The customers will say, oh, this is Aravind Mill only. They'll come and buy the goods. You pay 20,000 extra, no? This 20,000 extra, you should have earned immediately after the business was purchased in the profit. You should have written off. You should have earned the 20,000. If you will write off the goodwill gradually over a period of time, then one fine morning, goodwill will be 0. You bought the business before 10 years, still goodwill is there in the books of account. Means you were not able to make super profit, which can be used for writing of the goodwill. In that manner, I'm telling, if a business is having good amount of goodwill in their balance sheet, it cannot be a good company in that manner. Okay, so goodwill, we'll accept goodwill, patent, copyright, trademarks. These are all the example for intangible assets. Okay, sir? Tangible, intangible, fixed, current. Okay, anything else? We can talk like this for many hours, but we have some restriction. Okay, we have some other assignment in the afternoon, right? We have to finish it. Any other thing? What's the time now? 1 o'clock? Yeah. It's already 1. 3 to 1. Yeah. We don't value the copyright first. We will buy the copyright, no? See, valuation comes later only, no? Pen. After using some time, after some time, I go to value. So we have methods, but valuation is not required. Simply you can minus. See, copyright is for tenure, right? Tenure. 10 years, I'm giving a right to you to use or to copy the formula what I have, or to copy whatever intellectual property I have. If it is bought for 1 lakh and it is going to be used for 10 years, every year, how much is the spending? 10,000. If it is bought for 1 lakh to be used for 10 years, simple mathematics, 1 lakh by 10 years is equal to 10,000 rupees is the cost of an expenditure of copyright in every year. Okay. Suppose third year you're valuing the copyright 70,000 or 80,000. Okay. Valuation comes later. You have some topic if you take finance specialization. Here we talk about only, actually this is called amortization. Depreciation is the word used for tangible asset. Amortization is the word used for intangible. But in real world, valuation takes place much later. We have techniques for that. Valuation of business, valuation of fixed asset, valuation of intangible assets they are. Okay, I'll tell one more point I'll leave you. All these things are there in every country. Whatever we discussed so far is basic. But each and every country has its own custom, its own judgment to follow. Accountant has his own judgment to follow. I just told amortization 1 lakh divided by 10 years is equal to 10,000. It's one way of arriving at the value of copyright used in 1 year. It is right or not disputed, and you may follow this method. Some other country, some other accountant in the same country may follow some other method of calculating the amortization amount or depreciation amount. They may compare what is the today's value. If I sell this, what is the value? How much I bought it? What's the difference? That is going to be a depreciation. If they follow like that, there's a difference, right? Same country or same business organizations, they follow different accounting policies or accounting principles or accounting rules. To have a uniformity, today I'm in Bangalore, I can invest in UK, I can invest in USA in several modes. They also can come and invest in India. Okay, globalized economy. Okay, we opened up our economy long back, 90s. Okay, now if I want to compare Infosys and one of the counterpart of Infosys, which is in US, if I compare these two profit of the companies, if both are not preparing based on the same principle, the comparison goes illogical, right? Your question paper and Bangalore University question paper, both are different syllabus. If I compare your mark, there is some illogic. It is not a logical comparison. So we have to bring uniformity in the syllabus, meaning uniformity in the accounting principles. That uniformity all over in world we brought in, that is called International Financial Reporting Standard, IFRS. Okay. In India, what we are following is converged form of IFRS. We don't just blindly take IFRS and follow in India. We take IFRS and we, is anything needed, converged form of IFRS. The Institute of Chartered Accountant of India is having an accounting standard body. They will set and give. Already they have set and given, that we are following. Okay. Basic principles are same. Whenever there are options, which option to choose with, that is being guided by accounting standards. Previously, we call it as GAAP, generally accepted accounting principles. Those days, that's only within the country. Due to the economic expansion, we moved for US GAAP. Everybody follow US GAAP. I will prepare financial statement based on Indian GAAP as well as based on US GAAP, because I'm going to source money from US or money from outside India. They believe, okay, it's under US GAAP, so I can check this balance sheet. I can check this profit and loss account. If it is okay, I can give the money. They were following like that. Then there was a problem. Why should we follow US GAAP? UK was having international accounting standard. UK, there was a board, international accounting standard, IAS. That also gone. Now we are having the same body has been renamed, and they are following. They are giving us the IFRS, International Financial Accounting Standard, reporting standard, that is taken by Indian standard setting body. Okay, and they converge it, change it if it is required. They will give us, that is called IND-AS, IND capital letter AS separately. IND-AS, Indian Accounting Standard. Okay, previously it was called IAS, just Indian Accounting Standard without IFRS convergence. Now with the convergence of Indian International Financial Reporting Standard, we call it as IND-AS. Just to keep in mind, this is only theory. Okay, we are not going to give any importance for this because we are not going to talk about any much transaction, any international merger or something. Basic accounts we are going to study, but keep in mind theoretically, there is a board. That board is giving us IFRS. That IFRS is taken by Government of India, and that is being changed, and it is utilized in India in the name of IND-AS. Some 35, 36 are there. We'll discuss that in later. Okay, so this much I have given you some basic overview of the subject. Not even introduction, just overview of the subject. I appeal again to you, download that CBSE textbook and read it. Okay, well, coming for the next class, some follow-up of this class will be there. Of course, other students also will be there, no problem. We can discuss one or two doubts. You have to keep some terminologies written down in your book, which you don't know while reading that textbook. Okay, little effort you have to pay for this subject. It's not like other subject, some technical plus minus you will do, but some technicality of this subject you have to understand and you have to use properly. So don't blame me later at the end of the class or at the end of the exam. Sorry, nothing was understood by me. Everything is dealt in a slow paced manner. Okay, an informal way of communication also we can have. Okay, anything and everything about your accounting for manager course, I am the first point of if this first point of contact fails in contacting you or fails in contacted by you, that time second line of Arvind or Rajan. Okay, there are people. Okay, approaching is easy. His chief minister phone number is available in all the places, but I can't call the chief minister all the day. For that only ministry is there. Ministry. So please make use of ministry first. If ministry is not in favor of you, then chief minister can be approached. Okay, chief minister is not always free. They have their own strategy to be formed. If you disturb that time, then there will be a problem. Okay, so I think you are matured. You understand what I'm trying to say. Please, okay, informal way of communication. We'll create one WhatsApp group for only accounting for managers. If it is two sections, two together, or maybe together, there should be some interactions. You should ask some questions. Somebody should answer. There should be some kind of exchanging of ideas and knowledges. Okay, assignment. Okay, that we'll talk in a regular class. Okay, thank you so much. Yeah. Financial accounting. Okay. Accounting 2 means there is something called accounting 1 is there. Now, don't take that, cannot be useful for us. Accounting 1. In LMS also it is there, I think. In LMS, are you having that credential for you? Okay, they'll give you in a short span of time. Okay, there also you can access, but before that you can download. Yeah, NCRT, accountancy 1, financial accounting, you download. Yeah, it is there. No? So many chapters are there. So just 3 chapters of. Yeah, yes, you can in your WhatsApp group. Only link. Actually, it's a chapter wise. It will be there. You got to download one by one. Hey, that also you can download. Broker, correct? Or you can take from anywhere. Same book only. Yeah, e-Pathshala is there, no? And also there are some Swayam courses. You know Swayam platform, no? E-Pathshala means that's Swayam platform, just like your MOOC courses. MOOC, yes, MOOC courses. Massive open access course, something is there. Like that, we have one platform in India, Swayam. You go there, there are so many courses on accounting. Basic courses on accounting. You enroll, listen to the videos. It's left to you to write the exam and get the certificate or not, that's left to you. Okay, for this there is no charge. You just enroll yourself in any one of the MOOC courses, or particularly in India, Swayam courses. Okay, you can enroll yourself and you can get the videos. You can see the videos. You can view whatever we discuss. It will be there. You can understand whenever you want. Okay, recorded video of our own class. It may not be that much effective because it's going in a class mode. I'm not talking in a recorded mode. Okay, somebody asking some question, I'll go there, then I'll come back. Like that, it will be live class. But in Swayam platform, the courses are recorded in hypothetical, the controlled environment. Talks about the same 6-minute video, 5 minutes video. Please view that videos, listen to that videos. It will be supporting for us. 2 things, you please do that. Otherwise, regularly attend the class with physical presence. Okay, it will be helpful for you easily getting through the course. Okay, thank you so much. If there is no more doubt, we are closing now and we can see you in the next regular classes.
So what
This
is
is a sheet where you have to sign. If anybody is not signed, please pass it up. That's it. And you can reach me out in the phone. Okay, your numbers are with you, in the group you can see. Okay, I'm there. So you can call me if it is required during evening, 7 to 8 or 7 to 8:30, that range. That time will be free to answer your call. Okay. Mail, please avoid sending mail and getting my reply. Don't reply to because you may ask one question, how to answer, I don't know. Some difficult question to ask. The subject, but in the execution of something, assignment or something. So I don't want to answer that. You can just call up and you can tell, or WhatsApp call you can do. That's the way. Please come forward to speak. Okay, interact. Don't think this only 16 hours or 15 hours for this course. That's only official time given to us to meet physically each other. Otherwise, it's 24 hours course only. Please make use of the time in the evening. If you feel anything, you can write in a WhatsApp. I'll reply. I'll call back, something like that. Okay, be in touch informally also. That's a point I'm trying to tell you. Okay, thank you so much.
Thank you, sir.
In the group. Okay, 98860 880 49462. Yeah.
So 98860.
It's required call me during the evening, 6:30, 7:30. Okay, 8:30. 98860 okay, 49462.
Hello.
क्या हुआ? अरे भाई क्या हुआ? हाँ? अरे भाई क्या हुआ? मेरे देखो ना मेरे कितना सुंदर.
Wow, Mama.
देखो मेरा watch me.
Oh my God, Ritik, who to answer so?
कुकी तो मैं लाया हूँ कुकी तो.
Mama.
मैं तुम्हारा बात नहीं.
सुनो कथा. Mama मारो ना.
मारी में निकल जाते हैं. तुम्हारे साथ नहीं बात. Mm-hmm.
49464.
No.
पापा.
इंग्लिश में आता है हिंदी आता है. देखो मुझे आता है इंग्लिश. देखो you are good.
You look good.
देखो
Okay.
ऐसे.
ये क्या है? क्या बोला आपने मुझे?
ये इंग्लिश है.
हाँ इंग्लिश में क्या बोला था मुझे?
your colors? Okay, let's go to play. Let's go to
Take that.
English.
Bye.
वो जो कार का है वो कार का है
Presents. Okay, thank you so much. If there is no more doubts, we're closing now. Phone. I don't want to answer that. You can write WhatsApp. I'll reply. I'll call back. Be in touch. For this course. That's only official time. We must meet physically each other. Otherwise, it's 24 hours course only. Time in the evening. If you feel anything, you can write WhatsApp. I'll reply. I'll call back. Be in touch informally also. Thank you so much.
Thank you, sir.
Okay, 9 double 8 60.
So 98860.
Okay, you can enroll yourself and you can get the videos. E-Personalities, the same platform, just like your MOOC courses.